Recording in progress.
Molo, kuhle, dumela Sister Tebogo. Yes, myself, Honorable Van Rooyen, Honorable Mazibuko, Honorable Beck, Honorable Squatty. Okay. We're running short of one. Is it so?
Untlolang.
No, Chairperson.
Untlolang. Nna.
Uyifihla kayo
Chairperson.
kokumele mawudu. Uzobama kanjani uhlale khona? Oh yeah, here you are. Kene kusawubona hey. The two deputy ministers are here. I see Honorable Masonto, Dr. Masonto, Dr. Sarpe. So we are six, isn't it?
There are 9 members on the platform, Chairperson.
No, okay. No, let's start because today it looks like we are going to have a long session. Good morning, honorable members. The meeting is officially open. Let me welcome all the members of the Standing Committee, Finance. I'm not sure if the minister is back here. If he's in the platform, he's welcome. Welcome the 2 deputy ministers, Dr. Masondo, Honorable Sarupen, and the DG and the entire executive of National Treasury. Welcome the AG and the entire team from the AG, SA, and all other stakeholders, the leadership of the entities that report to National Treasury and account to this committee, the media, all and sundry, you are welcome. We are proceeding with this meeting as we have adjourned yesterday, where we are receiving annual reports from the entities, where we examine the audit outcomes as presented by the Auditor General yesterday. The purpose of tabling an annual report is to provide the committee with a comprehensive overview of the entity's performance over the past year. Tabling an annual report demonstrates accountability to Parliament and the public. This exercise is not for fault finding. The purpose of this exercise is to evaluate progress towards the strategic goals, objectives, and targets, identifying areas for improvement. So that's what this exercise is all about. And as we have said yesterday, we acknowledge progress in regard to the finance portfolio because there is progress indeed when it comes to compliance. And where there are entities that are struggling, we have to find mechanisms to make sure that they are up to speed and they comply like their peers in the portfolio. Do we have apologies?
Good morning, Chair. Yes, apologies, standing apology from Mr. Lekhanyane. He is attending the ad hoc committee, and then Mr. Beasley is attending SCOPA today. Thanks, Chair.
Okay. Thanks very much. So now we are going to 2. Before entities, is there any input from one of the DMs before I allow the heads of entities to present their reports?
Chair, not from me, Chair, because I think the Minister has provided very solid remarks yesterday, and I'm comfortable with what he said, and I've nothing to add. We'll just be listening and also to get guidance from the committee as usual. And as you correctly said, this is a critical moment for us to account, but also to be guided by the committee on certain blind spots that we might have as a finance family. Thank you, Chair. Let me hand over to my colleagues. Deputy Minister Saropin, over to you.
Thank you, dear Masondo. and to the colleagues from the Finance Committee. I think, as the Finance Minister indicated yesterday, these are the entities reporting to National Treasury. I do just want to make the point that the Office of the Tax Ombud, which is online today, is in law an independent institution. It draws its budget obviously through the Treasury, so we have an oversight role obviously over its performance and so on, but it does fulfill its functions independently in law. So just to provide that clarity as well, over and above what has been said. But otherwise, Chair, I think the Finance Minister yesterday covered the introductions well enough. Thank you very much.
Thank you, Deputy Minister Dr. Masondo and Deputy Minister Sarupen for that. Alan, we allocate, is it 25 minutes for presentation for each entity?
Yes, Chair. 3 25-minute presentations, followed by an hour of question and answers, and then the same process after that, 3 25-minute presentations and another hour Q&A. Thanks, you.
Okay. I will request the presenters that you time yourself in front of you. You have an app on the computer or on the phone where you put a timer. From 25, it will go down up to 1, so that I don't keep on disrupting you towards the end and disrupt the flow of your presentation. So please, presenters, make sure that you have a timer app in front of you. I hope the Tax Ombud is ready. Okay, there you are. 25 minutes.
Thank you, Chair and honorable members and both deputy ministers. And good morning to you all, colleagues and guests and honorable members of Parliament and deputy ministers of finance present with us today. It is a privilege to appear before the committee once again to present the Tax Ombud 2024-2025 annual report. As you all know, this coincides with the end of the government strategic period 2020-2025. I'm joined today by our acting CEO, Ms. Mamelayo Moira Malagalaka. She likes all her names to be said, and members of our senior management team who continue to demonstrate exceptional commitment to the mandate of the OTO. Without the senior management team, we won't be able to carry out the mandate and be a good performing entity. In the spirit of accountability and teamwork, I will do the mandate and the highlights in the presentation. And after that, I'll hand over to the acting CEO to take the committee through the performance against the 2024-2025 strategic plan. Following that, our senior management team, each an expert in their respective area, will share detailed highlights and insights from their functional areas as reflected in the annual report. Mamela, can you please go to slide 4? For the OTO's mandate. The OTO was established on 1 October 2013 in terms of Section 14 of the Tax Administration Act. And the mandate of the OTO is to deal with taxpayer complaints against SARS. That is, taxpayers will come to us and make complaints against us. And secondly, we've got another mandate in Section 16(1)(b), whereby even if there are no complaints, but we see trends, we can write to the minister to do so that the minister can give us approval so that we can conduct a systemic investigation against SARS on the emerging issues. So generally, the OTO's functions is to assist taxpayers' complaints against SARS and identify underlying causes of these tax complaints through systemic investigations. And the importance of the systemic investigation, it does not need to be too many as long as it is material. And then we provide also an impartial avenue to resolve taxpayer disputes. That is, the taxpayer will come and lodge a complaint, but we can see that here in this area we can do mediation, more especially if there are urgent matters, more especially customs issues, and then promote taxpayer rights and obligation. And we also contribute to improving tax compliance and tax administration. Coming to the highlights of the 2024-2025 financial year. During the financial year, we received an unqualified audit on performance information. Remember, the Auditor General only audited the OTO on performance information. So we received unqualified audit on that. And then another highlight that we are happy about is that during the financial year, over 18,000 taxpayers and tax practitioners contacted the office direct in terms of tax-related matters. Remember, taxpayers can come with us with queries, and then some of them, they don't know how to file tax returns, and then we assist them. But out of those 18,000 taxpayers, we validated 4,500 complaints because some of them will not be going through the complaint system. It will be like your queries that the taxpayer brings to us. Another significant highlight for the year is that on 12 August 2024, the Minister granted approval to the OTO to conduct systemic investigation into alleged SARS filing profile hijacking. And then by the end of the financial year, we're in the process of drafting the report, but I'm happy to report to Parliament that on 1 October 2025, the draft report was published for public comment. So the closing date for public comment is 31 October 2025. So after we have received and considered the public comment, we'll make the report final and send it to the Minister. Another highlight is that through our interventions, the value of top 10 refunds facilitated was 160 million. The last highlight is that although the OTO recommendations are not binding to SARS, but SARS over the year implements 99% of our recommendations. This shows the soundness of the OTO recommendations, because if our recommendations were not sound, SARS was not going to implement our recommendations. And secondly, we have noted delays, even though SARS implements 99%, but there are delays in implementing the recommendations. So during the financial year, we invoked the provisions of Section 22, whereby we wrote a letter to SARS, whereby we were saying it's Section 22 notices, so that SARS can provide reasons as to why they are delaying in implementing the OTO recommendations. So those are the highlights for the 2024-2025 financial year. I'm going to hand over to the acting CEO to take the committee through our performance against the 2024-2025 straight plan and APP. Thank you. Chair.
Maud.
Yeah, I've had my hand up for some time. I didn't want to disrupt. The presentation is not moving. It's still on the...
Yeah. Madam Younger, can you move the presentation? It's still on.
Yes, thank you. That's why I'm taking, our acting CEO will be doing this part of the presentation, and thereafter it will go to the senior management team. Over to you, Mamelane. Is it not moving?
Yes, it's not moving from their side.
There's nothing here.
But from our side,
the problem is that from our side it is moving.
Can you share with Alan and Butler?
Chair, yes, I'll share from my side. They can just indicate that I need to. Oh, there we go. It's on. It's on now.
Okay. Move faster. You have taken almost
Okay, now
10 minutes.
We are on slide 10, Chair. Mamelane.
okay. Good morning, honorable members, and good morning to the deputy ministers and the colleagues of the National Treasury. I'll be doing the presentation in terms of what happened during the 5 years as we ended the year with the year 2024-2025. We started off, we had 6 strategic objectives. And one of the strategic objectives that we started off with was the first main core mandate, which is to review and address complaints against by taxpayers against SARS. And with that strategic objectives, the baseline that we started with in 2021, was 86%. And by the end of 2025, we had 98% of complaints that we received that we acknowledged within 2 business days. So this is in terms of service delivery, how quickly do we acknowledge complaints that we receive from taxpayers. The next one, Chairperson, is how we evaluate these complaints to see if they are valid. And when we review and actually investigate them, and we gave ourselves 8 days to do it. And when we started off with the baseline in 2020-2021, it was on 89%. By the end of 2024-2025 year, we were on 98% of complaints that we reviewed within 8 days when we received them. And then in strategy 2025, we began the year with when we send a complaint to SARS, then SARS has to action. And after the complaint has been actioned by SARS, like Tax Ombud has said, 99% of our complaints are actioned by SARS, recommendations are actioned by SARS. And now with the, when we receive them, within 4 business days, we give the outcome to the taxpayers. And that we've done. We started with a baseline of 87%. By the end of 2025, we had 99% of the complaints done within 4 days. The next part of our mandate is with regards to systemic investigations. Now, we receive these systemic investigations in 3 manners. One would be when the public would have an outcry of a matter that's happening at SARS that's affecting a lot of them. And the second one would be when we receive from recognized controlling bodies also. And another one is when we see a trend within the complaints that we receive at the office, then we evaluate them to see if this is a bigger part that has to be investigated, so it doesn't affect a larger group of taxpayers. Now, throughout the 2020-2025 strategic period, we looked at 29 possible systemic issues. That's when we reviewed them. And out of that, from the existing systemic issues that we've got, after we've published them, we've told the ministers or the National Treasury that these are existing and SARS has to do something about them. We removed about 8 of them from the register. Currently now we've got only 10. So from there, it shows that SARS is responsive to our recommendations so that it doesn't actually affect the larger taxpayer base. As the Tax Ombud has alluded, during this period, we've had systemic investigations done that are approved by the minister. And on the 12th of August, we started the one on EBAG for bile hijacking. One of the things that we do is to try to improve or build confidence in the tax administration. And in 2020, we started a project where we wanted to teach taxpayers about their rights, their obligations, and also their entitlement. So we published a compilation of taxpayer rights, entitlement, and obligations. And in that, we started a campaign whereby we targeted educational activities around this compilation of taxpayer rights, entitlements, and obligations. And when we started this, we started in March 2022 until the end of March 2025, and we conducted 63 targeted educational activities in this regard. The next strategic objective that we looked at was to create an agile organization. In this one, we're talking about how we actually serve the taxpayers in terms of service delivery and if we can make ourselves efficient enough. And as you heard in the strategic objective 1, we tried our best to actually move from the 80s to the 99% so that the taxpayers get the best service delivery. And in this, it's supported by our community outreach activities that we did throughout the year. From 2020 to 2025, we did 846 community outreach and 264 community outreach. And we also did we implemented digital transformations with regards to trying to migrate from trying to implement digital platforms that make us efficient and independent from SARS. The next strategic objective is stakeholder engagement. But we did about 327 stakeholder engagements over the 5 years. And the next strategic objective is how we optimize governing structures. First, we started off with a qualified audit in 2021, and throughout the years, we corrected all our recommendations from the Auditor General, and from there, the next 4 years, we received unqualified audits. And in 2024, 2025, we instituted another combined assurance levels with audit and risk committee and an internal audit function. Thank you, Chair. I think this is where I stop. This is how we strengthen the mandate, Chair. We always try to submit proposed changes onto legislation to National Treasury so that it improves payer rights. I'm going to hand over to my colleagues to give you Senior Manager on operations to give you assessment of the year 2024-2025. Thank you.
Thank you, ACO. Good morning, Chair and Honorable Committee members, Deputy Ministers, and Treasury colleagues. I'll quickly take you through the complaints review process. On this slide, for the 2024-2025 reporting period, we received about 4,913 complaints. And of those complaints, when you make a comparison to the previous financial year, which is 2023-2024, there was an increase in terms of the complaints that were received, which equated to 6.39%. We validated 4,913 complaints and accepted 2,265, which formed a bulk of the complaints that were validated, followed by the rejected cases. If you look at the rejected cases, 1,432 of those, it was because taxpayers had not given SARS an opportunity to try and resolve the complaint before approaching our office. The complaints that were received in the 2024-2025 financial year, we have an MOU with SARS where SARS has to implement our recommendations within 15 days. There was an increase in terms of the recommendations that were implemented by SARS. Comparing to the 2023-2024 financial year, there was an increase of 57.43%. The first bullet, we are looking at the complaints as the CEO had alluded before in terms of capturing the complaints when we receive them. The target that we achieved was 98.10%, which means the complaints were captured within 2 business days. And the second bullet, we're looking at the complaints that were evaluated within 8 business days. We are standing at 98.37%. And then the close-up reports that were actioned by SARS by the OTO within 4 business days of receipt, we are standing at 99%. Through you, Chair, I will then hand over to my colleague, Mr. Victorious, to take you through this.
Thank you, honorable members. In the 2024-2025 financial year, SARS implemented 99.3 of our recommendations. This is 2,374 out of 3,090 recommendations. And that's a very clear sign of the responsiveness and the quality of our recommendations. Only 16 recommendations were not implemented, mainly due to taxpayers' non-compliance with valid requests from SARS, missing documentation, incorrect banking details, or expired assessments, just to name a few. Next slide, 22. A recurring concern of this committee and other stakeholders is that our recommendations are not legally binding on SARS, as per Section 22 of the Tax Administration Act. However, SARS or taxpayers must provide written reasons within 30 days if they choose not to follow or implement our recommendations. Now, to enforce accountability, we started with a formal process where we issue notices under Section 22 of the Tax Administration Act, where no reasons were received. In the past year, we issued 391 notices. SARS responded to 299 of them, resolving those matters. 92 matters remain outstanding at the end of the financial year. This process is ongoing.
Okay, thank you, Chair. We now hand over to Communications and Stakeholder Relations, which assists us for the office to be known. Hence, within the 2 minutes, I must give her a chance to talk about our outreach programs.
Good morning, Chair and honorable members. In the year under review, our strategic intent was to ensure that we promote taxpayers' rights and tax compliance, and also to promote our services, including reaching out to underserved communities and urban areas, partnering with stakeholders, thought leadership discussions, and also ensure that we promote our services through the media and through digital advertising and social media. In terms of our outreach programs, we reached 264 outreach. We did 264 outreach campaigns physically and visually, and we did this through community engagements and through collaboration with stakeholders, exhibition and events, digital outreach, media campaigns. Our media was from radio interviews, television, and newspapers. These radio interviews, they actually assisted the tax Ombud office to ensure that we reach as much communities as we have, because we don't have offices in other provinces. So we use a combination of community radio stations, national radio, and TV. We also use our website, where we reach 77,000 people were able to access our website. This assists us to promote education through the website. In terms of stakeholder relations, we managed to engage 121 stakeholders in person, in meetings, visual engagements, and through thought leadership discussions, one-on-one, and in public forums and at outreach programs. Thank you.
Thank you. I think we're gonna go quickly on the financial information, and then we'll go through that, and then we're gonna end because we've got 1 minute.
Good morning, Chair. So in terms of financial information, the OTO received the budget of 53.5 million during the 2024-25 financial year. Additionally, National Treasury approved that the OTO can retain the surplus of 4 million, which are related to 2023-2024 financial year. And then in total, the budget that was available for OTO was 57 million. From the 57 million, we spent 48 million, and then we were left with 8.9 million as a variance. Including that 8.9 million, it's 7 million, which relates to commitments. Those commitments were expenditure relating to services that were overlapping to 2025-2026 financial year, meaning the variance go down to 4% and go to HR. In terms of the HR, the headcount was 34 as at the end of 2024-2025 financial year. During the 24-25 financial year, we received 5 resignations from employees, and there was 1 transfer from OTO to SARS. There were 15 vacant positions during the 2024-2025 financial year, and then in 2025-2026 financial year, we advertised those positions, which they are at various stages in terms of the recruitment. So we plan to finalize the process by the end of the financial year. Thank you.
Thank you, Chair. I think we'll come quickly at the end of our presentation. Thank you.
Thanks very much, Ombud, Madam Yanga, and your team. You have also saved 3 minutes. The next is FAIS Ombud.
Thank you, Chair. Just want to share my screen quickly. Just want to confirm whether the committee can see my screen.
Yes.
Okay, thank you, Chair. Good morning, everybody. I'm the John Simpson, the Ombud for Financial Services Providers. Our mandate, just very quickly, obviously we deal with complaints between financial services providers and their clients.
Hello.
Sorry, yes.
We see the agenda here on the screen.
Oh, I'm sorry. Let me just quickly try and share the right screen.
Okay.
My apologies. There we go. Can you see it now?
Yes,
Sorry, Jack, can you?
can.
Thank you. Yes. Right. So just quickly, our mandate, we deal with complaints between financial service providers and their clients. So these are generally your advisors, brokers, advisors who provide financial advice. We use mediation, conciliation, or recommendation, and as a last resort, determinations, which have a status of a civil court judgment. We use those sparingly. We try to avoid those as much as possible. In terms of our contribution to economic growth and development, we opened 15,404 complaints. It was almost 5,000 more than the previous year. From our perspective, there was a large increase in consumer awareness. We closed just over 3,500 complaints. This included premature complaints. It was down from the previous year. This was essentially due to very old cases that we had closed in the previous years, and the caseloads have now stabilized. Our average closing time was about 59 working days, which is an improvement on the previous year of 63 working days. The largest category of our complaints that we receive relate to long-term insurance, which is mainly funeral policies. That makes sense because most of the policies issued in South Africa are funeral policies. It's the most commonly taken out policy. Most of our complaints originated from Gauteng, about 38.5% of the complaints. In 41% of all the complaints we closed, we made an award or a settlement in favor of the complainant. This includes the premature complaints where the service provider sorts out the issue very, very quickly without us having to investigate. The total amount that was awarded to consumers was 31.7 million, slightly or down from the previous year. This was due to the old cases we had closed in the previous year and the caseloads having stabilized, so it made sense. We issued 3 determinations, or we only had to issue 3 determinations, one more than the previous year of 2. This is due to the service providers settling matters and resolving them and complying with our informal recommendations. So it's very rarely necessary that we have to issue a determination. 79 applications were made to the tribunal for a reconsideration of a decision we had made. It was 76 in the previous year. In about 95% of all these applications, the tribunal refuses leave, saying the decision was correct and there's no basis that it must be reconsidered. So that shows that we give credible reasons and credible judgments. In terms of our budgets and source of funding, just to remind, all our levies are paid by the financial services industry, doesn't come from the fiscus. We requested a 0% increase in levies for the next year. We saw that we are managing with our budget and we didn't need to increase it at all. There's about 10,300 levy-paying registered providers in the industry that contribute to our levies or our budget. Our budgeted levy was 84.6 million. Just to give an idea, a base levy amount for any provider is about 1,000 or 1,100 rand per annum. For the largest providers, the levies are capped at 333,000 rand each. Just to give an idea of the empowerment programs that we do in terms of our staff, we have 63 staff. This is including graduates. Our vacancy rate is about 9.45%. We appointed 10 graduate trainees to try and teach them and educate them in what we do and give them a good grounding for future employment. 3 graduates were subsequently appointed to permanent positions within our staff complement. Spent over 700,000 Rand on short courses for staff, 61,000 on seminars, and 639,000 on academic studies. This is something that we regard as very important, educating the staff or allowing them to be educated, that they pursue studies, obviously that's relevant to the FAIS Ombud, but that's something that we're very sort of keen on, is that staff further their studies in future. We are BBE compliant. We have a level 8 rating. We achieved a clean audit again. This is the 3rd successive year. We paid 99.76% of our suppliers within 30 days. Target is obviously 100. We missed 2 of 818 invoices, unfortunately. 61% of our staff are female. 90% are African. Our target is 92%. Unfortunately, the staff complement is pretty small. So if there's 1 or 2 resignations, that immediately throws out the target. So it's a bit of a tricky one to attain. 9.5% white, our target is 8%. So again, the ratios were affected by 1 or 2 resignations. 5.78% of our staff have disabilities. That exceeds our target of 2%. And we appointed 10 graduates trainees, and our target is 9. We achieved 86.96% of our targets. That's 20 of 23. As I said, it was just the invoice targets and 2 of those EE targets. We'll keep on working on making sure we attain them. Achievements against our core performance targets. This is to do with our cases. So we want at least an 85% customer satisfaction score, where customers say they're satisfied, or this is FSPs and complainants that are satisfied with our services. We achieved that and exceeded it. 100% all our complaints we respond to within 4 days at most. We closed 99% of all our complaints within 9 months, which exceeded our target. We closed 98% of all our complaints within 6 months, exceeded our target there as well. And 91% of all complaints were closed within 3 months, and our target there is 75. So we did well in all our targets there. 3.6% of all our active complaints are older than 6 months, which is very good because our target is 20% or less. So we exceeded that as well, and we're doing well there. We achieved a 93% efficiency ratio. This is comparing the number of cases received to the number of cases we closed. So we obviously want to close at least 80% of all the cases we receive. In that comparison, we exceeded that target as well. Right, then just more of our targets in terms of submissions. We made all our submissions as we were required to. We held all our governance committee meetings. We can just mention that we used to have about 5 or 6 committees, but we reduced them to only 2 to equate with the size of our organization. We didn't need that many committees, so we have 2, and in the interests of efficiency and cost savings, and that has worked well. We had 12 union engagement meetings. The target is only 4, but I like engaging with the union, and it sort of helps the overall morale of the staff, so that works out well. We had 6 internal audit engagements, exceeded the target there. We had 5 external audit engagements. We attended the Money Smart Week, as we do every year. We exceeded our target with social media posts, and we issued 13 press releases. We also issued the 4 newsletters as we're required to every quarter. So in terms of the Auditor General audits, just to remind, yes, we got a clean audit. There was no material findings. We had 7 minor internal control findings with no repeat finding. We had 6 minor findings, which we all resolved, and we were busy implementing a combined assurance plan as recommended by the AG. Sorry, Chair, I flew through that. I hope the catching up of time will help the committee. Thank you.
Thank you, John, and also for Set for saving much of your time that has been allocated. Thanks very much for that.
Thank you.
And then let's go to Ombud's Council.
Thank you, Chair, and good morning, Chair, and to the honourable members of the committee, the deputy ministers, and everybody else who is present on the platform. My colleagues, Mr. Sipiwe Dube, our Head of Operations, will be sharing the slides. Thank you. I have with me Mr. Dube, our Head of Operations, Ms. Nofal, Head of Regulation and Oversight, and Ms. Winsami, our Head of Finance. But I will be running through the presentation in the interests of time. So if we could just move to our slideshow view and move on. So just a reminder, please, sorry, I'm seeing two slides on the screen. If we could maybe just have the single slide. A reminder of the Ombud, and apologies, Chair, before I start, I just wanted to also mention that this is in fact the first time that the Ombud Council is presenting our annual report to the committee. We became listed as under the PFMA for the first time in financial year 23-24, and the 24-25 year, which we are reporting on today, is the first year in which the Ombud Council became operationally independent. Prior thereto, we operated under a memorandum of agreements whereby the Financial Sector Conduct Authority provided all of our back office support and processes, but 24-25, we ran our own operations, which is something we're quite proud of for such a young organization. A reminder to the committee of our mandate. The council is in effect established by the Financial Sector Regulation Act to act as the regulatory oversight body for the financial sector ombud system. Our mandate is to ensure financial customers have access to and can use an effective alternative dispute resolution system. And our statutory functions include a full suite of regulatory, supervisory and enforcement powers to enable us to monitor the performance of financial ombud schemes, to grant recognition to industry ombud schemes and approve their governing rules, and generally to promote cooperation and coordination within the system, resolve any jurisdictional concerns, and importantly, what we see as a key part of our mandate is to promote awareness of the ombud system and publicize what ombud schemes can do. We see this as an important contributor to financial inclusion, because if consumers are to be treated fairly, it is essential that they have appropriate and accessible recourse in the event that there are times when they are not treated fairly. Moving to the next slide. Just to recap, therefore, our vision and mission aligns to our statutory mandate to ensure that a known, trusted and easily accessible ombud system exists for all in the financial sector. And we seek to achieve this through using the powers conferred on us by the FSR Act to harmonise the system and help improve its coverage and visibility and keep track of how well it's doing. And importantly, the Ombud Council has since inception operated against a background of regulatory reform of the ombud system. And we see a key part of our role then to proactively support the regulatory reforms proposed by the National Treasury to improve the overall structure and effectiveness of the ombud system. Moving on. We oversee 4 schemes, the 2 statutory schemes, the Ombud for Financial Services Providers, or FAIS Ombud, who you've just heard from, and the Pension Funds Adjudicator. And then from an industry scheme perspective, we oversee the National Financial Ombud Scheme and a small, very focused arrangement for the JSE. Just to remind those on the platform, that the National Financial Ombud Scheme came into existence just over 18 months ago, and as an amalgamation of 4 previous schemes. You previously had 4 industry schemes, one for the banking sector, one for the credit sector, one for life insurance, and one for non-life insurance. And those schemes have amalgamated to form the NFO, which the Ombud Council then granted recognition to. And this has been a really great step forward to help simplify and rationalize the Ombud system for financial customers. Next slide. This is just a very quick recap of our strategic priorities. The Ombud Council only has 2 core programs and or did so in the year under review. We had an inwardly focused administration program, which was really about ensuring we meet our overall governance objectives and our operations run smoothly to ensure we deliver the services. And then our outwardly focused regulation and oversight program, which focuses on the performance of our core regulatory function and supervisory functions in line with our mandate. Move ahead. Just a few achievements in the financial year. For the second year running, we did achieve a clean audit for a brand new entity. We believe this is something we're quite proud of. And just as I mentioned earlier, in 23-24, the audit was focused on our operations, but largely as implemented by the FSCA, whereas in 24-25, we again achieved the clean audit, but having implemented all of our own processes, financial processes, supply chain processes, risk management processes, governance, performance monitoring, human resources, all of those. So it was gratifying to see that we had implemented those effectively. Our organizational structure is very small. I'll come back to that. We are only 8 people, and those posts were filled by the end of the financial year. But there were vacancies for a substantial part of the year, but we are pleased that we filled all positions by year end, and we also have enhanced the corporate governance structure as well. Continue. Regarding our core mandate, so the second program, we've carried out a very broad range of multi-channel advertising campaigns, issued publications, numerous outreach activities, presentations, and so on to educate financial customers about the Ombud system. I haven't got into detail on those, but they included participation in the Money Smart Week program, as the FAIS Ombud is also mentioned. And we also are a member of the National Consumer Financial Education Committee, which is chaired by the National Treasury. And we work hard to collaborate with the consumer education initiatives of other organizations, of other stakeholders, particularly the FSCA and the Ombud schemes themselves, to ensure that in their activities, the message around the Ombud system is also reaching financial consumers. We finalized a process that had started in the previous year of introducing new Ombud Council rules for the FAIS Ombud. The Ombud Council, these rules are regulatory instruments. They are binding subordinate legislation. And we are in the process currently of developing rules for the pension funds adjudicator. We've worked closely with the National Treasury to support the development of the legislation that is necessary to implement the reforms of the Ombud system that the National Treasury has articulated in its 2024 policy paper titled "A Simpler, Stronger Financial Sector Ombud System." As part of our responsibility to coordinate, to achieve alignment and coordination across the Ombud system, we developed streamlined complaint data reporting requirements for the Ombud schemes that fall under our remit, and we also conducted on-site inspections of the Ombud schemes on a regular basis. We can move to the next slide. This is just a graphic demonstrating the actual targets in our annual performance plan for 24-25. All targets were achieved other than for where Program 1 is concerned. We had targeted ensuring measures around filling the vacancies, employment equity. There's some very, very minor percentage variances in the targets, largely because with such a small number of people, it's difficult to target exact numbers. And sustainable funding was ensured. The Ombud Council is funded by levies, which are collected on our behalf, paid by financial institutions and collected on our behalf by the FSCA, and that process has been operationalized, and we've also developed a full set of financial management systems and controls, which have been evidenced as appropriate through the clean audit outcomes. Can move to the next slide. These are the strategic outcomes then that we had targeted around the core mandate functions. So there were targets relating to dealing with jurisdictional matters and alignment. Those have been achieved, other than the target for our regulatory plan. The intention had been that we would, in the year under review, have finalized the rules for the pension funds adjudicator. Those were delayed and have been deferred to the current financial year. This was partly due to resource constraints, but we also felt that the time when we would have published the rules was a very busy time for the adjudicator and for the pension funds industry with the implementation of the two-pot system, and we didn't think it would be appropriate to add an additional set of processes into the mix for that industry. The targets we had set ourselves regarding developing consistent Ombud scheme reportings were all met. Next slide. Our consumer awareness targets, we actually, this is a slightly technical deviation, because we had at the start of the year identified some specific initiatives that we wished to do in a stakeholder plan, but the way the year panned out, the reality was that we conducted very extensive awareness campaigns, but we had seized other and frankly better opportunities to collaborate with other partners. So although a significant amount of consumer action, more than planned, was in fact achieved, it was not strictly in line with the documented plans, so we couldn't claim full credit for that, unfortunately. We had several targets also relating to supporting the implementation of the regulatory reforms, involving working closely with the National Treasury and other stakeholders, and those were achieved. And as I mentioned, we conducted all the on-site inspections we had targeted to do. Next slide. Just a quick snapshot of some overall operations and trends of the Ombud system during 24-25. So across the three schemes, the JSE scheme is not included here because it is a very, very niche scheme and only handles 1 or 2 complaints a year. So but the three schemes, the 2 statutory schemes and the NFO, in combination dealt with a total of just under 50,000 complaints during the year. These include 26,500 so-called premature complaints, which as John Simpson has explained, are complaints that are dealt with, that are received by a scheme, but where the financial institution against whom the complaint is made has not yet had a full opportunity to resolve it, so they are given an opportunity to resolve it. So there were 26,500 of those. Of all the complaints received, about just under 40,000 were closed, and the total award to consumers across the three schemes in the financial year was just short of was 450, just over 457 million rand. I think important to note that this only covers cases where an actual monetary award was recommended or determined by an Ombud scheme. In many instances, there are findings also in favor of the complainant, but where it does not necessarily sound in money. For example, in the case of the pension funds adjudicator, where a fund is ordered to go back and reassess its decisions, or other matters that don't necessarily sound in money. So that needs to be borne in mind when looking at that number. Moving ahead. One of the responsibilities of the Ombud Council is to report to the Minister and stakeholders on key conduct matters emerging from the Ombud system that are identified through the analysis of complaints data. And just to highlight a few key conduct risk trends that we have observed over the period coming from the schemes, is in particular in the NFO, digital banking fraud made up 30% of all complaints to that division, which is really exceptionally high and is only increasing. It is even higher than that this year. So the Ombud Council and the NFO are working with the FSCA to support their efforts in mitigating these digital banking fraud risks. In the credit division of the NFO, what were observed were some abuses relating to so-called value-added services that credit providers add to credit agreements, resulting in hidden costs and additional costs to consumers. And an area of particular concern is that a very high percentage of complaints to the NFO actually relate not so much to credit provision, but to the activities of debt counsellors. This falls outside of the NFO's jurisdiction and outside of the jurisdiction of the FSR Act. The conduct of debt counsellors falls solely within the jurisdiction of the National Credit Regulator. It is a matter the National Credit Regulator is also mindful of, and we have been engaging with the National Credit Regulator to see how the Ombud system, through provision of information, can help to address these concerns. But unfortunately, the complaints themselves cannot be dealt with in the financial Ombud system. In the life insurance division, similar pattern to what the FAIS Ombud has highlighted, funeral insurance related complaints are a very high category. In the non-life or short-term insurance division, motor vehicle claims remain the highest category of product. And a trend that has been noted is a significant proportion of claims for both motor insurance and homeowner insurance are rejected due to lack of maintenance of the vehicle and or the property. And we think this is indicative of the fact that consumers are cash strapped and are not necessarily spending the money they ought to would ideally like to maintain their property and thus protect themselves from claim rejections. The pension funds adjudicator, as I know this committee is well aware, complaints regarding non-payments of contributions and the impact that has on withdrawal benefits remains stubbornly high and make up approximately 80% of all complaints. And there are several initiatives underway between the adjudicator and particularly the FSCA to seek to mitigate this risk. And as mentioned by the FAIS Ombud, funeral industry related complaints. So, in the life insurance division of the NFO, the funeral related complaints will be around the actual insurance products themselves and complaints relating to those claims, whereas in the FAIS context, it'll be around the conduct of the financial advisors and the intermediaries, including the funeral parlors, dealing with these complaints. And in this regard, we note the project underway between the FSCA and the Prudential Authority to conduct a review of the regulatory framework for the funeral industry, and the Ombud Council is involving itself in that project as well to see how information from the Ombud system and the experiences of the Ombud system can help to shape responses to problem areas in that sector. Next slide. Just very briefly, our organogram, as I indicated, we're run by a board under the leadership of Ms. Eileen Mayer. I head up the organization, and we are then a very small complement of eight other people. We can move on. We have a board, 2 governance committees, an audit and risk committee, and remuneration and HR committee. It is an 8-member board, including myself and the FSCA commissioner as non-voting member, and then 6 non-executives, all of whom are appointed by the Minister of Finance. And our board and committees have been functioning very effectively. All governance processes are in place. We have both internal and external audit processes fully implemented. Just to note that the Auditor General has opted not to audit the Ombud Council, but has approved the appointment of an independent external auditor for the Council. Next slide. We've been fully PFMA compliant during the past financial year, no significant clean external audit, and no significant internal audit findings. Move on.
You are left with 3 minutes.
Yes, Chair, I'm almost done. Just the financial highlights. We, just to indicate here, 23-24 came off an extremely low base. So the reason you see for the significant variation between the 2 years was as I say, we were not operating independently. We had almost very, very small staff complement for even by our standards for most of that year. So the base was low. And from a revenue perspective, the major difference is that in the prior year we had received, although we are normally funded solely by levies, we had received a temporary fiscal allocation of 8 million rand in the prior year because the levy income had not yet begun to flow, but that was returned as no longer required. And next slide. This is just a recap of our expenditure. You can see that we spent 86% of budget. The largest expense items are employee costs, given the nature of our work, followed by our consumer education and awareness mandate. And I think that is the final slide. Thank you very much, Chair.
Thank you, Leon, for the presentation. Honorable members, now is the item for engaging the presentations. Clarity, seeking questions and or comments. Over to you, members, on those 3 presentations so far. Dr. Beck.
Thank you, Chair. Just bear with me a moment. My first question will be directed to the first presenter, and then I'm sure we'll get to IRBA later. So actually, I'll just focus on the first one for now. Chair, if there are any other questions, perhaps they can go. I'm just trying to pull up the questions that I had jotted down.
Okay. Honorable Mauta.
Yeah, thank you, Chair. Once again, greetings to you, to the colleagues, and to everybody who's online. I have a few questions for the text ombuds, and we'll move to FAIS and the last one. Chair, you and I are politicians, including Dr. Masondo and the other Deputy Minister, Sarupin, and the Minister. There's a saying in politics that he who feeds you controls you. Now, Tax Ombud continues to operate under SARS infrastructure and support functions such as ICT, HR, and security. Without full independence, the Office of the Tax Ombud is not a mediator between SARS and taxpayers when they are harassed and targeted by the system, which is owned by SARS. It simply becomes a help desk under the same institution it must hold accountable. There's a person who's switching on your lights. You want to scream at that person, he'll simply switch off the lights. So when will the O2O achieve full structural and operational independence from SARS? What has been the response from the Minister of Finance and National Treasury to previous requests for such independence? Chair, where recommendations of the O2O are not implemented or executed by SARS, does this not undermine the very purpose and authority of the office? The lady who presented said they do respond, but sometimes it takes longer for them to respond to the extent that they need to issue, apply some sections of the Act. So what mechanism exists for O2O to enforce its findings or report non-implementation directly to Parliament? In terms of the systemic and taxpayer-related issues, Chair, many complaints continue to arise from delayed tax refunds, incorrect compliance statuses, and poor communication from SARS. So what systemic issues remain unresolved, and what steps is the O2O taking to ensure that taxpayers are not subjected to repetitive administrative failures? Has the O2O observed any pattern of harassment, profiling, or intimidation of taxpayers who raise legitimate disputes against SARS officials or processes? If yes, how are such cases handled? And does the O2O have sufficient authority to intervene effectively? In terms of public awareness, Chair, O2O continues to reject a large number of complaints due to taxpayers not understanding its mandate. What outreach methods have proven most effective in educating the public about when and how to approach the O2O? What partnerships exist with recognized controlling bodies or universities to strengthen awareness of taxpayer rights and obligations? It's well and good that you would assist taxpayers as and when, but what about the obligations of the taxpayer? And what mechanism are you putting in place to assist in educating the taxpayers? In terms of institutional capacity and funding, Chair, the O2O was established in 2013. Since then, the number of complaints have grown sharply, yet the staff complement remains extremely small. The refusal by National Treasury and this Parliament to adequately fund O2O appears to protect SARS from robust oversight rather than strengthen the taxpayer confidence. How many times has the O2O requested additional funding for personnel since 2013, and to whom were these requests directed? And what was the outcome of these requests, and what is the current shortfall in personnel relative to the workload? Chair, the last part will be focusing on the future legislative reform. Has O2O proposed any legislative amendments to strengthen its powers, particularly to ensure that SARS cannot ignore or delay implementation of recommendations? Would O2O support a provision allowing Parliament to directly oversee SARS compliance with O2O recommendations as part of its annual review process? The question to FAIS is, the presentation says 41% of the complaints were closed in 2024-2025, which is growth looking at 35% that was achieved in 23-24. Now, what happens to the 59% that is still not closed? The presentation does not cover that section. How far are they in the process? and what is being done about them. Secondly, Chair, the presentation says you've got 64 staff members. Can we please get a breakdown of this workforce in relation to the demographics? So what gender do we have here? Age, race, and at what level of the organization are these individuals? That will be all from my side, Chair. I thank you.
Thanks, Honorable Mota. Honorable Beck, are you organized now?
I'm ready for you now, Chair. My question is just to the tax ombud, and it's not very sophisticated questions, two of them. The first is, in your annual report, and it seems it was the same last year, I pick up very little financial information. In fact, it's only 2 slides long, and there's no balance sheet. There are no notes in the financial statement. Could you explain to me why that is? And then the second question, Chair, is I want to check whether I'm also correct that the tax ombud earlier said that the Auditor General only audits their performance information and not their financials. Those are my only 2 questions, Chair.
Thanks, Dr. Beck. Honorable Van Ryn.
Thank you, Chair. A very good morning to you and all members of Parliament on board, as well as officials from various institutions that have presented to us, and also officials from Parliament. Chair, I want to, because I was a bit worried about this issue of the financials, but I think I've been covered because we really need to know the figures, especially in terms of what is allocated to the Ombud's office and the adequacy thereof. And then secondly, on the issue of the independence, at its inception, that was in almost more than a decade ago, I think it was 2013, we were very clear as public representatives that the issue of the independence of the Ombuds office should be prioritized. I remember that time it wasn't that long ago, and we came out with a clear approach to that as Parliament to say this is what must be done. I think it will be important for the Secretariat of the Committee just to retrieve for us resolutions that we have taken as Parliament hitherto in terms of ensuring the independence of the Ombuds office. That will help us to determine if we have done our work as public representative or what more still need to be done. Because as Honorable Mauta said, we have a role to play as Parliament to make sure that the office is first independent, but the office is also what you call well capacitated. So I think it's important that we retrieve those resolutions, because this issue is not coming for the first time. It was there since the inception of the office. So we shouldn't be reinventing the wheel and coming up with resolutions that we have failed to implement over years. We just need to revisit our resolution and make sure that we give effect to those resolutions, Chair. And Chair, last time you said we will hear, but yesterday, the AG's opinion about these entities in a summarized form. I'm not sure when is that going to happen, but I will leave that to you as the chairperson. Thank you very much.
Thanks, Honorable. Thanks, Honorable Mazibu.
Thank you very much, Chair. Good morning to you, Dr. Maswanganyi, and members of Parliament on the platform, and all the entities that are here today. Chair, before I ask my questions, let me first start by complaining. I see members are satisfied, maybe, because they're not raising this. You know, the issue of receiving the presentations very late is disadvantaging our role as oversight and the committee that is charged with scrutinizing, especially the annual reports, even the quarterly reports. So we received these voluminous reports very late, and some of the presentations we received them this morning. It is unacceptable, Chair, because it really disadvantages us from going through the report. Now we must depend on the presenter when the presenter is running through the presentation. So if that can be improved, I'm just appealing to the deputy ministers also present here. If that can be improved going forward. Chair, on tax ombud, in terms of the OTO recommendations, I want to find out what happens in a case that SARS does not implement. What is the next step? I see you wrote that after you've written some communication, there was some improvement, but not all the recommendations were implemented. What is the ultimate step to make sure that all the recommendations are implemented? And then on the hijacking on the alleged SARS e-filing hijacking, I do note the fact that there is a process in place. There is a report that is in process, but I'm interested to know, Chair, what were the findings of the investigation into the alleged SARS e-filing hijacking? And Chair, still on the tax ombud, outside the matters resolved, what is the estimate of taxpayers who are not reporting experiences that led to a refund facilitated? And also, what measures is OTO having to recommend that relate to creating ease for taxpayers to use the digital platforms? Because some of the taxpayers do not have this capacity of using the digital platforms. And how is the Ombud dealing with the circumstances of private consultants who charge taxpayers exorbitant amounts for basic tax tasks because of the inability of the taxpayers to use the digital platform? On FAIS, Chair, I note that the majority of cases are from Gauteng, and most probably in urban areas. What is the extent of cases reported from rural areas? Because the presenter did not mention the cases from rural areas, and I think ordinarily there should be cases from rural areas. And then, Chair, what measures is FAIS taking to improve its BBBEE compliance? I saw you reported on it, but what measures are you taking to improve in that regard? And the last on FAIS, Chair, the number of cases resolved relative to the reported cases is significantly low, and the current financial year has performed lower by over 1,500 cases. Does the FAIS have sufficient capacity to address the reported matters? And what is the plan to lower the resolution period? Thank you, Chair. On the Ombud Council, I can only congratulate them for the clean audit. So it means the systems that they have put in place are actually working. But one question that I would want to get from them is that is the Ombud Council of the view that a significant majority of users of financial services now have their rights, and are financial service providers taking adequate measures to empower consumers? Or is the detail lost in the multiple terms and conditions users sign without full comprehension? So that's all, but keep up whatever you are doing to maintain the clean audit you have received. Thank you, Chair.
In that order of presentations, let me start with the tax ombud. Yeah. Can you respond to the questions that members have raised?
Okay, thank you, Chair. I'm going to start with the issue of independence because it also touches to the question that is raised by Honorable Martin regarding legal financial information. When the Office of the Tax Ombud was established in 2013, it was made that the Office of the Tax Ombud is not an entity in terms of the PFMA. So if you are not an entity, as Honorable Martin has said, that we are not structurally independent from SARS, this implies that the commissioner is still the accounting officer in terms of the PFMA. So our structure is that we've got functional independence when we do our recommendations, when we do systemic investigation. Even the minister cannot say this is how we have to do our work. However, in terms of IT, procurement, and HR, and even the rental space, we use the budget of SARS. So our budget of 53 million is allocated directly for us, but that budget covers mostly salaries as well as other operational expenditure, which is so small. But IT, procurement, rental, and even HR, we use SARS. So when I was still at Treasury in 2015-16, it is correct that the previous case of Judge Webb talked about the issue of independence. When I at Treasury and the policymaker, what you look at it is money. Little did I know that in maybe 5 years to come, I will be the tax ombud. When Judge Webb came to us, the issue was, if you want to achieve independence, it's gonna be expensive for the fiscus. That's what we said. The financial implications are too high because when you are an entity, you need to have a CFO, you need to have committees, you need all that. So we, at that time, GTEC did the study regarding the independence of the OTO. And then it was found that it's gonna be very expensive. Hence, we remained in this manner. So now we've been speaking to the minister because there are some issues, as Honorable Mate has raised, that it will be difficult sometimes to raise a hand on the hand that feeds you. But we do that. I'm telling you, the report on filing profile hijacking is evident to the fact that we act independently of SARS. So what we're gonna do now, we said SARS is going to delegate powers to us so that we obtain a little bit of structural independence. In the meantime, that Treasury is still trying to find ways of achieving full independence in a cost-efficient manner. So it's not like Treasury does not want to see the Office of the Tax Ombud being independent, but the issue is finance. So it goes to the issue that is raised by Honorable Webb, that there is legal financial information and Auditor General only auditors on performance information. In fact, it is the previous Tax Ombud who requested to be audited on performance information because our view was that we table our annual report in Parliament, so we have to be accountably independent. So we requested to be audited. So we don't have financial information because our financial information comes under SARS because SARS is still the accounting officer. So that is the case. So what we did this year in order to strengthen accountability, we did appoint the Independent and Risk Committee, the Audit and Risk Committee, so that we can strengthen our accountability. So that is why, Honorable Beck, that we have legal financial information and there's no balance sheet, there's no notes. That falls under SARS because we are not an accounting officer. And I just want to assure Honorable Matwe that even though our recommendations are not binding, or even though we are still structurally independent, we are still structurally dependent from SARS, but we function independently. And as I'm saying that the investigation we've done on e-filing profile hijacking is evident to that because we were quoted on the Sowetan of 26 September that there's disagreements between the SARS commissioner and the tax ombudsman. So that is showing that we operate independently of SARS when we do our functions. So coming to the recommendations not binding, I think I'm guilty because when I was a treasurer, we drafted this legislation. I was part of the drafting of the legislation. Coming to the recommendations not binding, when we looked at it was that if you make the recommendations binding, when we look at other tax ombuds in the world, not other ombuds, because the tax ombud is the only ombud that looks only on the government entity. So all over the world, the recommendations to the SARS or Revenue Authority by the tax ombuds are not binding. That is the international standard. Because we are not like other ombuds that look after banks or pension funds adjudicator that looks after the financial services. We look after a government entity. So now, when we have to make recommendations binding, that in terms of drafting of the legislation or implementation, that is the first part. This implies that the minute we make recommendations binding, SARS must appeal to our recommendations. We must give SARS a right of reply. So meaning that there should be a tribunal whereby SARS will sit and say, why didn't SARS implement our recommendations? So that is the step when you make recommendations binding. You should give SARS a right of reply. And thirdly, once SARS is found that SARS has not implemented our recommendations, there should be sanctions on SARS. So who is going to give sanctions to SARS? Is it the minister? And what will be those sanctions? So when you make recommendations binding, that is step one. You've got step two, which is about right of reply of SARS, step three, about sanctions. So those are the issues when you make recommendations binding. But I must say that we appreciate Parliament because we normally tell SARS that if you do not implement our recommendations, when we do our annual report as we are doing today, we're going to tell Parliament that you don't implement our recommendations. So what we have noted is that even though SARS implements 99% of our recommendations, they still delay in implementing those. Hence, we invoked the provisions of Section 22 so that SARS can give reasons for delaying. I'm going to hand over to the acting CEO, who's also an accountant because I'm a lawyer, who's going to talk now more about the issue of the Auditor General as well as requesting finances as well as the HR. And then thereafter, manager stakeholder is going to talk about our outreach programs in partnership with universities. Thank you.
Thank you very much, Tatima. Thank you, honorable members. Yes, so we are not really an entity, hence why we do not have a full set of financials. So the financials are audited through SARS. Our finances are audited through SARS. The only sections that have been audited by the Auditor General that we agreed on is with regards to performance information only, and we account to the Parliament with regards to the information in terms of performance information. When it comes to adequately funding the OTO, we did an exercise whereby we requested GTEC to come and assist us, and GTEC assisted us to see how best we can actually expand the OTO, even being in 9 provinces. That report was done and handed over to Treasury, and as the tax ombudsman alluded, that Treasury had said to us that it's a bit expensive, but that also it was options with regards to independence, whether we gave Treasury options in terms of whether we want to be a 3A entity or how would it work. Because one of the things that one of the things about the tax ombudsman is that us being here, we directly have access to SARS systems. So when unlike other ombuds, they will send a letter to request more information, we can directly go into the system of SARS and check what happened. And that goes also to service. So for example, if a person says to us, which is one of the service complaints, and says that a SARS employee was rude to them on the phone, we are able to listen to those calls also to see if that really happened. Or if somebody says, I was at the SARS branch at this day and this happened, we are able to see that tiering to see that was this person here really at the SARS branch and were they turned away or not. So those are, and what are the notes on the system on what happened with this person. So in terms of service, we are able to go into all SARS systems and actually check in terms of the service that they give the people, procedures that they are following. We can see if they've done the right procedures on their systems, and also in terms of their administration, if they are handling registrations on time or not. If somebody applied and they're not coming back to that person on time, yes, we are handling that. We look at that. And also in terms of digital, we are able to see, we get complaints from our taxpayers about whether they are not able to get, for example, booking system, if they are not able to get appointments, if they are turned away by SARS, or if they are helped by SARS in any way, or stalled or told to go on the systems. That's what the complaints that we deal with, and we make sure that SARS is alerted, especially the executive management. With regards to e-file profile hijacking, I'm just going to give it to the text Ombud to give us a little bit of what are the summary. We did publish on the 1st of October the e-file profile hijacking findings, draft findings that also SARS had a look at. So the summary goes by, just a second, Chair. Okay, with regard to the questions raised by honorable member regarding defining hijacking the findings. Our findings cover not only SARS, but also practitioners and taxpayers. So we have those findings because it's a lot, but to summarize, we say that there is highest prevalence of profile hijacking amongst tax practitioners and all that. So we have summarized the findings, and the findings are available on our website. And then the findings that relate to SARS, as you are saying, that our findings are not only related to SARS, they are related to tax practitioners as also as other entities such as CIPC. And then our findings also is that the incidents of profile hijacking are common to personal income tax and VAT. And that before they changed the tax return information at SARS, they first go to CIPC. And it is important to note that we've had discussions also with CIPC, whereby CIPC also agreed with us. We've had discussions with BASA, the banks. We've got we had a lot of discussions with entities that are dealing with this. So hence now our draft report is out, and we are waiting for comments. And another thing that the taxpayers has said to us was that what the taxpayers say, that they think that there's alleged internal fraud and insider involvement, because they are of the view that sometimes the bank account will be changed quickly and the refund will be paid quickly to the fraudulent bank account, whereas they want their bank details to be changed by SARS. That does not happen. So those are the findings, and the report is available on our website. But if the honorable member wants us to send the draft report, we can send the draft report. The summary is very nice because it has got everything. Coming to the digital platform, how is the Ombud dealing with those that cannot access the digital platform? That has been the question when we are migrating to everything to becoming AI. And we had the honor of being joined by a young professor from the University of Sweden, whereby she said she did a presentation during the Public Protector Conference also. So we spoke to her during that time, whereby she was saying that even all over the world,
people are worried whereby everything is going to move to digital because there's lack of access. So what we are doing when we do our community outreach, we partner with SARS so that taxpayers can understand how you file a complaint, and we still make complaints available so that the taxpayers can file their complaints by hand. But the problem is that we've got only one office, which is in Pretoria. This implies that some of the taxpayers we phone them back because they'll say, even though we've got a toll-free number, but we phone them back and we assist taxpayers to file the complaint form. And what we have established recently is that if now the taxpayer has written an email, at least you should assist in filing to change the email to be the complaint form and ask the taxpayer to sign so that the taxpayer at least does not go through the process of doing the complaint form. I don't know, I think we've done all. And then you talk about the intimidation by SARS, Honorable Matwe. We had those complaints. I remember there was one taxpayer who went to TikTok talking about implementation and harassment, intimidation and harassment by SARS. And in terms of our mandate, that is more of a service issue because it deals with taxpayer service to SARS. So we dealt with that issue whereby we deal with those complaints. But you find that some taxpayers are scared of saying their names. I remember on the e-filing profile hijacking, after we went to the radio, there's one taxpayer who came to us and said, even though SARS has introduced two-factor, but it's still not working for the companies. And we asked the taxpayer, please give us your names so that we can check with SARS with the name of your company. And the taxpayer said that I am scared because I'm scared of being profiled by SARS. And he refused to give us, but he said that please check that in your report. I'm sure I'm not going to be the only one reporting that, but please check that. So we have those queries or complaints whereby the taxpayers will come to us and say that they are scared of intimidation and profiling by SARS. In terms of outreach methods, I'm going to hand it over to Pearl, who was our senior manager outreach.
Thank you, Tax Ombud. Thank you, honorable members. Honorable Matwe, I just want to highlight this issue that I always talk about when we go on outreach, that text language is not easily comprehended, and education and awareness by both OTO and SARS is very crucial to ensure that taxpayers know their rights and they comply. Now, in terms of the methods that we use in the Office of the Tax Ombud, if you look at our annual report from page 32 to page 36, it shows, up to page 37, it shows all the entities that we went to, but I'm going to take you through just so that you understand it from the horse's mouth. We have outreach events that we use. We do a lot of roadshows and exhibitions. We partner with universities, like we partnered with University of Johannesburg, University of Limpopo, University of South Africa, University of Pretoria, University of Witwatersrand. So in that case, we present to their students. We do a lot of exhibitions to those universities. We do a lot of media engagements. We issue media statements in terms of the current issues that are happening in the Office of the Tax Ombud. On top of that, we issue media statement to solicit a request from radio stations to interview the Office of the Tax Ombud in terms of education. So we will use case studies where Office of the Tax Ombud was in favor of taxpayers to educate the public about how good the Office of the Tax Ombud is able to assist them when they have complaints against us. And in that case, when we do that, we get a lot of free publicity and we generate a PR value. If you look at the previous financial year, we generated a PR value of 23 million, meaning that if we had money, we could have spent 23 million, but because we have a good stakeholder relations with media, we're able to get free publicity to communicate the service of the Office of the Tax Ombud. We use a lot of radio and TV interviews as well. We use publications. We have a newsletter called Fair Play, which updates taxpayers about processes and procedures. I heard you say that complaints are rejected. Yes, it's because, firstly, people don't understand any SMS that they get from SARS. I think it gets diluted because they don't understand tax language. So in our newsletters, we educate taxpayers about processes and procedures to say, before they come to the office of the tax ombud, they must approach SARS and they must understand how to lodge a complaint with the office of the tax ombud. They must know the cases that we have dealt with so that it can assist them on how best to next time when they see such cases that they can be relatable to them. We also use languages to ensure that taxpayers understand our services. We use different languages, like we use Ilungelo Lakho, for example, in terms of television. We use community radio stations, and we also use national radio stations. We have a good collaboration with stakeholder engagements, and also solely because of the relationship that the tax ombud, senior management, acting CEO, and the employees of the OTO availability to ensure that when there is a stakeholder engagement, they are available. So we do a lot of collaboration with RCBs, which are the taxpayer representative. Quarterly, the tax ombud does have a meeting with them, but on top of the tax ombud having that meetings, we from the management point of view, we do a lot of presentation to their members, to their tax practitioners, to ensure that they understand the processes of the office of the tax ombud. We also do thought leadership discussions. If you look at our annual report, the tax ombud
Hello, OTO. How far are you from concluding? We still have other entities to their reports.
Okay. So yes, we have to make sure that we communicate.
I think, Chair, we are done. So if there are follow-up questions, we are available. Thank you.
Okay. Yeah, I can see I've got lots of information. I follow you on the social media. I'm your friend on the Instagram and Facebook. So I can see this public tax application that we're talking about. So please do more. Tax matters are complicated, more especially to members of the public. Let's go to FAIS. Are there questions that for you, FAIS?
Yes, thank you, Chair. Yeah, there were a few, so I'll quickly run through them. All right, the question was, there was an increase from 35% of cases found in favor of complainants to 41% this past financial year. Why is that? Well, basically, that's due to the premature complaints. So that process where we first send the respondent or the service provider has never seen the complaint before, so we want to give them a chance to try and sort it out before we need to investigate. Those, they settle very quickly. So if there's a valid complaint there, they settle it very quickly, and that leads to an increase in findings in favor of the complainant. So that's the main reason for the increase there from 35% to 41%. What happens to the other 59%? There we find no reasonable prospect of a finding in favor of the complainant for various reasons. Obviously, the provider didn't do anything wrong. There was nothing in law they did wrong. They were fair in their process. So we can't make a finding in favor of the complainant. Just remember, any decision we make, whether it's in finding of the finding in favor or against, you can appeal to the tribunal, Financial Services Tribunal, any decision we make. So obviously that 59%, that's where the 79 cases come from that went to the tribunal, where the complainants were not happy with our decision. And as I say, in 95% of those cases, the tribunal agreed with us. There's no basis for the finding to be changed. So there's a very rigid process there to make sure we don't make mistakes. Then in terms of the staff members, just a quick breakdown. Obviously, there's a lot of detail in our annual report. So, you can look at that, no problem. But just some highlights. 64 of our staff, average age is 40 years old. Our senior management staff, average age is 47. 62% of all our staff are female. 75% of all our senior staff are previously disadvantaged group. and 90% of all our staff are from the previously disadvantaged group. So that's a basic breakdown there, but as I say, there is more detail in our report, and we can provide feedback if necessary, no problem. Then in terms of urban and rural areas, yes, it's a little bit difficult to classify. That is something we can look at doing, certainly. We report on complaints by province, because that is sort of very easy to get that information to determine where the person is from and what they report. So we don't report specifically on rural versus urban. It's certainly something we can look at doing. We'll look at and see if we can do something more in that regard. Thank you. Then in terms of our B compliance, look, I must admit, it's very difficult for a government organization to actually meet the targets. We've actually never made it before. We were actually able to make it this past financial year and be compliant. It's a first for us. From our knowledge, it's very difficult for any government department to make it because it's skewed towards private companies, not government organizations. I know the Commission is looking at ways to cater for government organizations. We will certainly do our best to at least maintain that rating and improve it if we possibly can. We certainly will do that. Then in terms of the resolved cases, yes, the resolved cases dropped because we got less cases in. So what basically has happened is that our premature process is working very well. Our guidance to the service providers is working very well. We have an open door policy. If the service provider has complaints or issues and they need our guidance on, so they can avoid coming to us, we tell them, listen, this is the way we would approach it. This is the way we would do it. We suggest you look at resolving it that way. They resolve the cases. So less is coming in. We're having to deal with less cases because the service providers are resolving these things. We noticed a 32% reduction in the number of complaints against the 10 largest providers over the last 3 years. And then we asked them, are you sorting these things out? Why are we getting less? Yes, they're sorting it out. They don't feel it needs to come to us. They resolve it. And then we confirm, do you tell the complainants about us? If they're not happy, yes, definitely. And then they come to us. So we're pretty satisfied that process is working really well. Obviously, we're keeping an eye on the numbers. We have the capacity to deal with these cases. What we're looking at is constantly improving our quality. We want to make sure consumers get their response quickly, get a decision quickly, and then that decision is airtight and it's fully explained. I mean, we have some assessments that run to 10 pages where we're explaining every single aspect of it. And as I say, where the complainant's not happy with our decision, when it goes to the tribunal, we want to make sure we've covered all the bases, we haven't missed anything. And as I say, 95% of the applications to the tribunal are dismissed because there's no prospect of a different finding being made, and the tribunal supports our decision that we made. So yes, we'll keep on working on the accuracy, keep on working on the quality of the assessments and the turnaround time. We already brought it down from an average of 63 days to 59. Yeah, we're going to keep on working on that. We want to bring it down to as low as we possibly can into a world standard and try and give consumers the best possible service we possibly can. Thank you. Hopefully that answers all the questions.
No, okay. Thanks, Vice Ombud. Ombud Council.
Thank you, Chair. There was just the one question from the Honourable Member for the Ombud Council, and that's related to the question whether we feel that financial consumers are sufficiently aware of their rights in the event of unfair treatments and whether financial institutions are doing enough. I guess the short answer in terms of awareness and things is no. There is always more to be done. It requires multi-pronged, multi-stakeholder responses. From the Ombud Council's perspective, this is why we are tackling this from two perspectives. On the one hand, as I mentioned, we work very closely and collaboratively through the National Treasury-led consumer financial education structures. We're involved in helping to develop policies and strategies and implementation plans in that regard, because we think it's an important element of overall, it's all very well to give people general financial consumer education, but it's equally important that as part of that, we emphasize their right to fair treatment, what fair treatment means and looks like in practice, and where to go in the event that that is not being experienced. And that's why the Ombud system is such an extremely important underpin. The other angle from which we do this is to work closely with the conduct regulators of the financial institutions themselves. So bear in mind, the Ombud Council does not have jurisdiction directly over financial institutions. That is the role of the FSCA and in our space and the National Credit Regulator. But where we believe that the Ombud system is such an important underpin to the initiatives of those authorities is that the information and the learnings from the Ombud system, both the complaint trends information and select illustrative case studies and the lived experience of complainants, really assists those entities in helping to proactively identify and monitor emerging risks of what things that are going wrong in relation to the financial sector, and also enables them, where such risks are identified, enables them to have evidence-based mitigation strategies and supervisory, regulatory, and enforcement responses. There's also a responsibility on the Ombud schemes themselves to report any occasion where they become aware through the complaints they're dealing with a material contravention of a financial sector law by a financial institution. And the Ombud Council has been expanding, introducing rules to ensure that that not only covers actual contraventions, but also persistent and material lack of cooperation by a financial institution with an Ombud scheme, that those matters are reportable to the regulators. So it's an ongoing effort, and I think it's a loop of activities between the Ombud schemes themselves, the Ombud Council as the oversight authority, the financial sector conduct regulators, and then the industry itself and the industry associations in terms of continually reinforcing the right combination of awareness, education, and then oversight and enforcement where things fail. And I hope that answers the question. Thank you.
Thanks, Leon. Let me do like this. Let me take you through previous decisions in regard to the issue of OTO. As Honorable Van Rooyen has alluded, in the 5th Parliament, this matter was dealt with. And also in the 6th Parliament, we dealt with this issue of the tax ombud vis-a-vis SARS. And let me read to you, which I will request Dr. Zakel and Allen to share with you this record. It says that in a joint virtual meeting held on 7 June 2022, Standing Committee on Finance and the Select Committee on Finance, that's NCOP, received briefings from the Tax Ombud, SARS, and National Treasury on challenges related to tax administration and the independence of the Office of the Tax Ombud. The discussions centered on the structural, financial, and legal obstacles affecting the OTO's functioning and its relationship with SARS. At the time, the Tax Ombud, Justice Bernard Mwepe, outlined several institutional challenges faced by the office, notably its financial dependence on SARS, despite its mandate to exercise oversight over the Revenue Authority. He raised concerns about the absence of a dedicated legal framework formally establishing OTO as an independent statutory entity and noted the office authority to initiate systemic investigations remain limited to matters referred or directed by the Minister of Finance. Justice Mwepe also drew attention to recurring complaints submitted to Parliament about SARS conduct, particularly delayed tax refunds, and identified theft-related tax fraud, and confirmed that these concerns had been escalated to SARS as systemic issues requiring corrective action. In response, the SARS Commissioner maintained that the working relationship between SARS and the OTO did not compromise the Ombud's independence. He highlighted operational improvements within SARS, including better turnaround times, automated refund verification, and enhanced taxpayer communication. Regarding the refund delays, the Commissioner explained that SARS was legally permitted to withhold refunds under audit, provided that taxpayers were formally notified of the audit. The National Treasurer acknowledged the validity of the concerns regarding the OTO's independence and committed to addressing them once the recommendations of both the New Gen Commissions of Inquiry into SARS and the Zondo Commission of Inquiry into State Capture had been reviewed. Treasury undertook to use these recommendations to guide the development of a new framework to strengthen the OTO's autonomy. Committee members expressed continued concern over the OTO's financial and structural dependence on SARS, particularly its reliance on SARS administered funding and infrastructure, which they viewed as incompatible with its oversight role. Members also raised issues around fair taxpayer treatment, delayed refunds, and the need for improved coordination between SARS, Treasury, and OTO to uphold taxpayer rights. When the committee met again with the OTO during the presentation of its 2022-2023 annual report, members noted that most of these challenges persisted. The committee reaffirmed that the true independence, both structural and financial, is essential to maintaining public confidence in the integrity of South Africa's tax administration system. It warned that continued operational and funding dependence on SARS undermines the OTO's credibility as an impartial oversight body. The committee reiterated its call for comprehensive legislative reform to establish the OTO as a fully autonomous institution with its own budget vote and governance framework independent of both SARS and National Treasury. Recommendations by the Sixth Parliament Committee. The Sixth Parliament SCOF recommended that the incoming committee, which is this committee, should prioritize addressing the structural and financial challenges facing the OTO to safeguard its independence and strengthen its effectiveness in protecting taxpayers. This should include advocate for legislative reforms to establish a clear legal foundation for OTO's institutional and financial autonomy. In addition, the committee should engage National Treasury to ensure that OTO is adequately resourced through a direct budget allocation or a dedicated sub-vote, thereby enabling it to perform its oversight mandate without undue financial independence. In pursuing these reforms, the committee must balance the need for sound revenue collection and fiscal discipline with the equally important obligation to uphold taxpayers' rights. So, this is the institutional memory in regard to the decisions that were taken before in regard to the OTO. So, Alan, please circulate this information with all the members of the committee and the two deputy ministers who are in the platform so that we follow up on the decisions that have been taken before. Thanks very much for that first round of presentations. Let's go to the next round of presentations. We start with IRBA. IRBA, there you are. 25 minutes.
Well, good morning, Honourable Chair and Honourable Members. Thank you for this opportunity today to brief the committee on our 2025 annual report and activities. My name is Imran Nagy. I'm the current Chief Executive Officer at the IRBA, and I'm joined by Ms. Zine Mshengu. Ms. Mshengu is a board member of the IRBA, and she's the chair of our Audit and Risk Committee. I will briefly cover some background about the work that we do at the IRBA, and also provide an overview of our operations, achievements, and finances for the year, as well as our strategic focus areas for the next year. And then I'll hand over to Ms. Mshengu, who will present on our audit outcome and annual performance targets. So if I can go to slide 4. So we as a statutory body established in terms of our own act, the Auditing Profession Act of 2005. We're also a Schedule 3A public entity in terms of PFMA. And we have a 10-member board that is appointed by the Minister of Finance. But we generally operate through statutory committees. So the IRBA is basically one big secretariat to a number of committees in terms of all our functions. Because we both a standard setter, so we set auditing standards and issue guidance to auditors, and we also the regulator that enforce the standards and the compliance against the standards by auditors in the country. I think it's important to note that we are recognized as an independent audit regulator by the International Forum of Independent Audit Regulators. It's a member body of 56 independent regulators from around the world. And I think linked to that, it's worth mentioning that we are assessed as an equivalent independent audit regulator by the European Union, the United Kingdom, and the Swiss regulators. This means that our regulatory regime and processes benchmark against other independent regulators, and we are assessed as equally competent in all respects to those regulators. So our mandate, just at a very high level, is we develop competency requirements for registered auditors. We then register, once they meet those qualifications, we register and license them. We then develop and issue ethical and auditing standards, monitor their compliance against these standards through risk-based inspections, and when there is improper conduct or complaints received, we investigate and discipline RAs that are guilty of improper conduct. So those are, in a nutshell, our functions. I think also important to note that we do not regulate chartered accountants. And I think this is something that we've picked up is generally misunderstood in the public. We accredit professional bodies, and we basically accredit their academic programs for purposes of qualifying as registered auditors. So we are currently in a situation, and I'll talk a little bit about it later, where we only regulate just under 3,500 auditors who are also CAs, but there's 50,000, 60,000 chartered accountants that are out there that we do not directly regulate. They belong to those professional bodies and are registered with them on a voluntary basis. So just on some fast facts on slide 5, some fast facts about the IRBA, and I must say that I had to update a few of the numbers, and apologies for that. You will see maybe some slight differences to the slide that you received, but I'm projecting and presenting on the correct figures. So some fast facts: as at the 31st of March 2025, we had just under 1,600 audit firms in the country that are registered with us. In those firms, we have just under 3,500 individual registered auditors. 870 of those are non-assurance. I take, for example, like myself, I'm an auditor, but I'm not currently signing opinions, and therefore my status is non-assurance. So, yeah, we have around 2,700 signing auditors in the country. We had at year end 683 registered candidate auditors. I'll talk a little bit about that later. And we now have 2 professional bodies that are accredited with us. We have accredited the Association of Certified Chartered Accountants, also known as ACCA. That became effective last year, April, and which means that we have 2 pathways or academic programs that students can follow in qualifying as a registered auditor. It's early days. Obviously, we have the South African Institute of Chartered Accountants and the ACCA, but it's obviously early days for the ACCA because they just got started. Our latest assessment of the audit universe is that there's just over 74,000 statutory audits required in the country in a given year. This is a rough estimate. But yes, what this means is that statutory audits are audits that are required by law or by act. For example, the Companies Act that requires an audit on a company. And 1,938 of these are public interest entities. These are entities that have a public interest impact. And obviously, as the regulator, we are more interested or focused on these entities and the audits of these entities, because when something goes wrong in these entities, it impacts a wide range of stakeholders. I will not cover the performance numbers. I think Ms. Mshengu will cover that. I think I'll mention that we received for 2025 599 reportable irregularities. These are non-compliance reported by the auditors to the IRBA, and in many instances where there's a continuing RI, we report that onwards to the relevant authorities, including law enforcement. So that is a process that we believe is very important in terms of whistleblowing and calling out non-compliance within companies, and for that to get through to the appropriate authorities to investigate. I'll talk a little bit about a report that we recently issued in terms of how we monitor the reportable irregularities with other regulators that we don't regulate. So we basically pass on reportable irregularities to, for example, SARS or the FSCA or even the police. We have 95 staff members at year end. We have an 81% Black and 53% Black female composition. And considering that the vast majority of our 95 staff is professional staff, including chartered accountants, registered auditors, forensic examiners, and even IT and system auditors. We also have lawyers and HR practitioners. I think it's important that we are well capacitated and well competent to regulate the auditing profession in the country. I will then move on to some highlights, just at a high level. I'm conscious of time. So March this year marked the end of our year end, but it also marked the end of our previous 5-year strategy. So over this period, our main focus over and above our normal functions was to help restore confidence in the auditing profession. And I think I don't need to remind the committee members that the profession did go through quite a dip during 2017, the period between 2017 and then during COVID. But generally, the sentiment about the profession is that we have managed to stabilize the profession. We also managed to close out a number of restoring confidence projects and integrated them into our mainstream work. For example, we did update our Act strengthening our independence and our enforcement powers, and these are all now fully implemented and integrated into our processes. We enjoy stable governance with all board members and executive management positions full. There's no acting positions. We sadly lost one of our executive directors, our director standards, around about this time last year, Mr. Imran Vanker, and may his soul rest in peace. It was a great shock to the organization, because we're not a big organization, and that was a great loss for us. The IRBA, we remain a high-performing organization, and we demonstrated good governance and consistent performance, and Zini will cover that shortly. We did identify, as I mentioned, certain gaps in the ecosystem. I've mentioned this before, and it's also in our annual report, that, and that's around the regulation of accountants. As I mentioned, we only regulate auditors, and accountants that are in companies, etc., are not regulated to the same extent than auditors. So we are supporting National Treasury, who has embarked on a process on addressing this, and also we're working with the Office of the Accountant General in terms of putting something in place that will enhance accountability of accountants that are operating in the ecosystem. We also updated our brand. I think it's important that we remain a brand that is attractive to younger people, and we are going to market with a clarion call of integrity, public interest, and audit quality, and it's forging purposeful and impactful relations with our stakeholders, including outreach events and awareness about the social value of audit. What do auditors actually do? What do we offer society? And then in doing so, hopefully make the profession more attractive to younger people in joining the profession. On slide 8, just on audit quality improvements, I think this is at the heart of everything that we do. Is we are driving audit quality by the audit firms, because the moment audit quality is compromised, that is when trust gets eroded by investors or the public. So we've done quite a lot in the last year and over the last 5 years in strengthening our oversight over audit quality. So we've seen now some consistent improvement. For example, in 2019, we had positive outcomes of only 38%, and we've now managed to grow that to about 45% at the end of 2024. It does run 1 year behind because of the review processes, but there's certainly a positive trend that we hope we will see going to the future. We've also seen fewer investigation referrals by our inspections committee from about 14% in 2023 to 7% in 24, which is also an indicator that firms do take their responsibility seriously in producing consistently high audit quality. We've implemented some proactive monitoring processes with the firms, and we've established, for example, a quality monitoring forum where we engage with the heads of quality of larger firms, and we talk about matters impacting audit quality and what are the barriers or the issues that's there in the profession that erode their ability to produce consistent quality. We've also, and I mean, we don't regulate audit committees, but audit committees appoint auditors and they monitor their independence and their work where the IRBA is not present. We cannot be present at that point because we're an independent regulator. But we have started now reaching out and engaging with audit committees directly to talk about matters impacting audit quality. We see they're a key stakeholder in promoting audit quality, and we see them as a force multiplier of driving high audit quality. So we've started with doing some roundtables with audit committee chairs. We've managed to, by the end of the year, we've managed to reach out about between 40 and 50 audit committee members to talk about, how we can help them, how we can support them in their assessment of auditors and audit quality when they make those appointments. I also mentioned reportable irregularities. We've issued our first report this in the past year, analyzing the reportable irregularities that we received and the way we dealt with them. So this report is aimed at enhancing transparency and supporting coordinated regulatory efforts to effectively address identified irregularities. On slide 9, just to highlight, I think the committee will recall that we've been criticized before for having very low fines, which was capped at 200,000 per charge. So we now have the new maximum fines limits in place with the maximum of 25 million per charge for an audit firm. And these fines were gazetted by Minister, and we have also issued a guideline to our committees for public comment, and that is also now implemented in terms of how committees will use the fines matrix going forward. We continue to update our auditing standards and our ethics standards to respond to risk in the ecosystem. For example, we had to update the code of conduct to address emerging risks of the use of technology by audit firms, etc., to make sure audit firms use technology ethically in the audit process, and that they still take full responsibility for the outcomes of the audit work and not rely on technology or artificial intelligence to give that assurance. And then lastly, I'd like to cover our education and transformation. So we've had the highest number of registrations in terms of our audit development program in the last year. We grew it from 123 to 205 at the end of the year. And this is due to the fact that we've discounted the registration fee to promote entry and into the program. We've also made some significant progress with the firms. And if I say we, although we don't directly control transformation by the firms, we do engage with them regularly and we survey them in terms of their progress. And what we've seen now is a marked shift in race and gender representation among registered candidate auditors that are much more representative of the population than the current register, and it's much more diverse and inclusive, and which is very positive for the future of the profession. To give you an idea, is at the end of March 25, we had 52% of our registered candidate auditors from African, coloured and Indian populations. And we've also seen gender equality with more females in the system coming through. In fact, 53% of our RCA population are females compared to the 30% of the current RA register. So I guess the process is, as older current members exit the profession, these candidate auditors will come in and gradually transform the profession, and that is the movement we would like to see in a sustainable manner. Honourable Chair, I'm going to then quickly cover just an overview of the finances, and then I'll hand over to Ms. Mshengu. So on slide 11, what I'd like to highlight there is our total revenue for the year was 209.8 million. We received about 72% of our revenue directly from firms.
That you are left with 4 minutes, eh?
Apologies, Chair. I'll finish.
Yeah,
okay, so I'll stop here, Chair. I think I'll take this then as read and hand over to Ms. Mshengu. Thank you.
Thank you. Thanks, Imran. Thanks, Chair. So if we proceed then just to the performance highlights, which is on slide 13, and I'll quickly run through those in the interest of time. So, Chair and members, we are pleased to report that we got a clean report again for the 25 financial period, and also noting that no findings were reported as well in the report to management across the 3 areas that audit focused on. Imre has gone through the financial information. I'm going to quickly go through the performance measures on the following slides, and how these are set out is according to the different areas within the IRBA that look at the various stages of the audit process, and finally with operational effectiveness, looking internally in terms of how we deliver on our mandate. So overall, we managed to achieve 13 out of the 14 KPIs, with 1 KPI under operational effectiveness not having been met, and I'll go through it as I go through the rest of the slides. So on to the next slide, looking at the standards department. Here we had 2 objectives, one looking at the development of auditing standards and the other one looking at ethical standards. So here we did manage to achieve over our target in these 2 areas. We had set a target of 85%, and we managed to achieve all of the targets in these 2 areas. On the next slide, which is looking at education and transformation, so Imre has covered that we don't have a direct influence on the transformation numbers because this happens through the firms, and it's gone through the various initiatives that we put in place in this regard. So we have 4 objectives under this outcome. So one is looking at the environment in which the audit development program is offered, and here we did manage to do a bit more initiatives than we had set out to do. From a monitoring perspective, where we monitor the accredited bodies, so he mentioned that we've got 2 bodies now that we have accredited. We did manage to issue the monitoring reports in that regard and do the monitoring exercises that we had set out to do, just to ensure that the 2 accredited bodies do comply with the accreditation model. Over the next slide, the other 2 objectives that we had set out to do in this regard is, firstly, just in terms of contributing to the transformation, we managed to do a lot more initiatives than we had planned. So you'll see in that regard that there was a deviation which was on the positive side, and also then just monitoring the registered auditors in terms of their compliance with the continuing professional development. We managed to achieve that as well. Then over the next slide, I'm not going to cover it in detail. We had set out to do 109 inspections, which we achieved. What I want to focus on is perhaps on the next slide, just in the interest of time. We look at investigation. So when we started off, we had quite a backlog of investigation. So you'll notice here that we started off with quite a high number, and in the current financial period, we had set out to do 80 investigations, and we've done more than that. And the reason for that is that we have worked down the backlog that we had, and you'll see in the next period that we've got a lower target in that regard. So we're quite comfortable with the progress that we've achieved in that regard. And then finally on investigations, on disciplinary matters as well, we achieved more than we set out to do here. So we achieved 90% against a target of 85%. Again here, because of respondents who actually admitted to charges prior to hearings, and so that enabled us to get through more disciplinary hearings. Then from an operational effectiveness perspective, as I mentioned, we did achieve a clean audit report. From a procurement point of view, we have managed to also meet our procurement targets. Over the next slide, which is the one area that we did not achieve on, this speaks to transformation just from a management control perspective. Because of the demographics currently at a management control level, we haven't been able to achieve this. And it's really speaking to the current demographics of the management team. This is something that we are working towards, but however, it's also dependent then on us filling the various roles as they come through. So this is one thing that we are working towards. But at an overall staff employment level, we are meeting the objectives from a transformation perspective. So this brings us then to the end of the performance targets that I just wanted to report on. Imre, I don't think you're going to have time to get through the strategy. We had just put through some slides just highlighting our strategy, but Chair, I think we did actually go through this in the year. So we will pause here.
Okay, thanks very much. FIC?
Thank you, Honourable Chair. Good morning. Good morning. Thank you, Honourable Chair, Deputy Ministers, Honourable Members. I hope you can see the presentation on the screen. The FIC will cover just very quickly a bit of the background on the institution and then spend a bit of time on our results from the previous financial year. And if we have some time left, we will also talk a bit about what we expect to happen in the near future, shaping our future strategy. Just to make sure everyone is on the same page, the FIC is a statutory body. We're created by the Financial Intelligence Centre Act as our governing legislation. We formally started operating in an operational capacity in 2003 when we first started receiving our first suspicious transaction reports. In terms of our legislative mandates, we are South Africa's national centre for the receipt and analysis and generation of financial intelligence from these types of reports. We are a Schedule 3A entity and we are funded from the national budget. I think just an important aspect to keep in mind is that the FIC does not in and of itself conduct investigations, but we do work very closely with our law enforcement partners who are involved in the investigative processes. On a day-to-day basis, our mandate in terms of the legislation requires us to identify funds that may be proceeds of lawful activities or identify persons who may be involved in money laundering, terrorist financing, and the financing of proliferation of weapons of mass destruction. And more generally, we are also required to contribute to the country's efforts to combat money laundering, terrorist financing, and proliferation financing. And this is more in the domain of policy setting, advice on legislative amendments, etc. The FIC is also solely responsible for South Africa's compliance with its international obligations under UN Security Council resolutions to implement targeted financial sanctions that may be imposed by the Security Council. We also supervise non-financial institutions for their compliance with the FIC Act, and we produce forensic evidence on the financial flows of transactions which may be used in legal proceedings, especially in asset forfeitures and in criminal prosecutions. The FIC does not consume its own information. The main beneficiaries of our information is the National Prosecuting Authority, the law enforcement agencies, especially the Hawks, the Revenue Service, Intelligence Services, the SIU, and a number of supervisors as well in the Reserve Bank and the Financial Sector Conduct Authority. Operationally, that means we gather information from various sources, both information that's reported to us and information to which we have access by law or in terms of paid subscriptions. From this, we generate financial intelligence, which is then shared with the various authorities that require this intelligence information for them to discharge their own mandates. This is mainly law enforcement agencies, but not limited to law enforcement. We also monitor developments in this environment around us to identify new developments, especially in international standards that require us to adjust our policies and legislation. A very important aspect of our work more recently is the production of forensic accounting evidence. And this is a new capability that the FIC has initiated in the previous financial year and which started operating in the year under this report. And I'll talk a bit more about how we've been performing in that respect. We also implement, as I've said, our international obligations as far as financial sanctions are concerned, and we provide guidance to the private sector on their compliance obligations and assist in the supervision of that compliance. The FIC is a relatively small organization. At the end of the previous financial year, we had a total structure of 325 positions, of which 275 were filled. 233 of those were employees from designated race groups, so roughly about 84%. 173 were female employees and 6 were employees with disabilities. The vacancies in this structure were partly the cause of the shared forensic capability, which was a new structure that was brought online, and for which we created a number of new positions that which we started to fill during the previous financial year, and that process is also still continuing through this current financial year. So looking a bit at some of the results, and I'll not speak to all of these, but just to highlight a few, especially where our work has had impact on the work that other entities and institutions have been doing. For instance, the asset forfeiture unit was able to recover 144 million rands worth of criminal proceeds based on information that is directly attributable to information which the FIC shared with the asset forfeiture unit. In the NPA's annual report, they report a total of 725 million rand forfeited and confiscated over the financial year. So the FIC's contribution to that is roughly 20%. The FIC blocked 157 million rand worth of suspected proceeds of crime. And so this is where we exercise our powers under the FIC Act, and where that amount of money is then pursued further through the work of the asset forfeiture unit to bring the necessary court applications for the eventual forfeiture. The FIC also contributed to a large extent to the efforts to exit for South Africa to exit the FATF grey list. I think members are well aware of the announcements that came out last week as far as this is concerned. And in terms of our capabilities and our tooling, we've constantly been investing in upgrading and improving our technology, the tools that we have available, the software that we use in our information gathering and analysis processes. And we are also looking at embarking on the use of new technologies in the stream in the near future. So looking more at our day-to-day work, the FIC at the end of the previous financial year had 55,262 institutions registered with the FIC as accountable institutions. So these are all the institutions that have identified that they have compliance obligations under the FIC Act, and one of those obligations is to register with the FIC, and that then brings them under the formal oversight of either the FIC or one of the other supervisors in the Reserve Bank or the Financial Services Conduct Authority. It's very important that we understand this compliance effort by these private sector institutions is the basis for the generation of information that the FIC then uses in our core functions. So in the previous financial year, we received just over 13 million reports from these institutions in the private sector. 570,000 of those were suspicious transaction reports. 9.7 million were reports on electronic funds transfers that crossed our borders in and out of the country. And 3.1 million were reports on large cash transactions, in other words, exceeding 50,000 rand threshold. From this information, the FIC produced 1,092 reports on our own initiative to law enforcement agencies for further investigation, and we responded to 3,104 requests from law enforcement agencies and provided the information they requested from us, and this is 100% of all of the requests that we've received. 51 of our reports went into a specialized working group that is tracking illicit financial flows in and out of the country, and this relates to, among others, tax evasion and other forms of financial flows. As I said, one of the very impactful powers of the FIC is to intervene and block transactions or to freeze accounts. And in the past year, we used that authority for 164 times, and the total amount blocked was just over 157 million. In the slide, one can see how that compares to previous years, and this is very much dependent on the types of information that's reported to us, and it's also the engagements with our colleagues in the asset forfeiture unit. The same applies also to the amounts of recoveries, and these are recoveries by the asset forfeiture unit, where they relied on information from the FIC to have a successful outcome to their court process that led to the recovery of these funds. Further to the implementation of our mandate, as I've said, we've established a shared forensic capability, and the target for this forensic capability is to deliver actionable forensic evidence that can be used in legal proceedings. In other words, where in a court, the prosecutor needs to prove a flow of funds as part of the evidence that they need to bring. This forensic capability can provide that evidence for the prosecutors to use in their cases. Similarly, where they are applying for the forfeiture or confiscation of criminal proceeds. The focus in the previous year was very much on building the foundation, establishing the work processes, developing the understanding of the skill sets that we require in this forensic capability. But at the same time, we've also started operating and already enrolled 14 cases at the end of the year and produced a number of reports, also contributed to a number of recoveries of proceeds of criminal activities. This is a major focus area for the FIC to expand in the coming year and the following financial years. One of the things we've realized is that we need to focus much more on forming closer partnerships with the authorities that operate in our environment. In previous years, we reported on the partnership that we've formed with the banking sector in Samlet. That is continuing very strongly and delivering significant results. But for this financial year, we then built on that to form similar partnerships with our colleagues, a three-way partnership with the Assets Recovery Hub, with the Asset Forfeiture Unit, the DBSA, the Hawks, in other words, and ourselves, where we actually locate members from these entities in our offices in the FIC, so that we can shorten the communication channel and sharing information with them that can lead to the recovery of proceeds of crime. Similarly, we host a fusion center which comprises of members from the prosecuting authority, the revenue service, the Hawks, the FIC, the SIU, who all sit in the FIC's offices. Again, we host this and provide the secretariat for this fusion center, where they conduct project-driven investigations in very complex cases, money laundering cases, corruption cases, etc. And this has also started delivering results in the recovery of proceeds of crime. The FIC has continued to expand our formal partnerships with authorities, both within the country and internationally through memoranda of understanding. On this slide, I'll just point out the compliance with Security Council designations. The international benchmark requires countries to implement these sanctions within 24 hours of a designation being done by the Security Council, and we've maintained a 100% record as far as this is concerned in the previous financial year. There were 30 such designations in the year. As many of the other entities have reported today, the FIC received a clean audit with no findings. As far as performance is concerned, we exceeded 8 of our targets, met 10 of the targets, and 2 of the targets were not achieved. And one of those relate to the payment of invoices. The other relates to a mid-year report that the FRC was required to deliver on the status of the anti-money laundering system in the country, which was taken by the grey listing process. On the supervision side, the FRC established in the past financial year, established a new capability to conduct supervision of non-financial institutions on a risk basis. In other words, we developed the tools for us to assess risk of different entities within sectors of the non-financial institutions, for instance, lawyers, estate agents, casinos, etc., and allocate a risk profile to each institution within those sectors. On that basis, we then plan our supervision, our inspections of those entities, and the amount of time and effort we need to devote to the supervision as far as the closeness and the intrusiveness of the supervision is concerned. We conducted 288 inspections based on this risk assessment process in the previous year, out of a total of 566 inspections, which were more general compliance focused. Many of these inspections lead to administrative sanctions that are imposed where non-compliance is found. The FRC imposed a number of administrative sanctions, and some of those included financial penalties to the value of just over 2 million rand. Other supervisory bodies similarly impose administrative sanctions such as the Reserve Bank Prudential Authority, the Financial Surveillance Department, and the Financial Services Conduct Authority. As far as our financial overview is concerned, our grant for the previous financial year was just over 400 million rand, and we mainly spend that on operating costs. The larger part of that goes to personnel costs. The capital expenditure investment is funded from savings that we can generate from other parts of our operations. So that accounts for a very small percentage, although it's actually a very important component of the future development for the FIC. Just a quick word on the grey listing process. I think the slide has now been overtaken by events last week. Members would be aware at the end of the FATF meetings last week, on the 24th of October, the FATF announced that South Africa has now exited the grey list process, and we have completed all the actions that were required of us during this process. So this is due to very, very hard work by a large number of officials across government as a whole. Now, just quickly looking at what lies ahead for us. The whole anti-money laundering system in the country is moving to a risk-based approach, not just for the FIC. So this means the FIC and all our partners in this system have to make decisions based on our understanding of money laundering, terror financing, and proliferation financing risks. South Africa is in the cycle of conducting this risk assessment. We've completed one on money laundering and one on terror financing, and there's one that due within this financial year on proliferation financing. And the results of this risk assessment process then needs to inform future policy making, future resource allocation by all the different authorities, including the FIC. The FIC is contributing to a very large extent to this risk assessment process based on the information that we have at our disposal. Some of the findings from the risk assessments that have been done thus far, and which we believe will be borne out by a future update of the risk assessment. South Africa is a major financial center in the African continent, and is certainly the largest in sub-Saharan Africa. Our financial institutions dominate the financial sector in many of the sub-Saharan African countries. So this means that South Africa is both a conduit for funds going into the region or coming from the region and moving to the major financial centers around the world. This requires of us to be very vigilant on the financial flows in and out of our country and within our financial institutions. Some of the things that we still find a challenge is the prevalence of cash in our economy, and cash always makes it more difficult to follow the funds, and that is still a challenge for the FIC and also for our partners who have to follow financial investigation techniques to identify suspects and assets that may be subject to forfeiture. Corruption and bribery remains a challenge. It's both a significant generator of proceeds of crime, but it also weakens the systems that we require to identify and investigate the activities from which proceeds of crime are generated. And the misuse of corporate vehicles, companies and trusts is an emerging trend that we see more and more often, where these corporate structures are used as a front when people engage with financial institutions and then obscure their own identity and their own involvement in the transaction capabilities. This means for the FIC, we have to be working much closer with our partners and continue strengthening those partnerships that we've embarked on. We have to make sure that the information flow through government is significantly improved. And that we are for the FIC ourselves concentrate much more on improving the quality of the financial intelligence that we can provide. And this mainly involves using better technology, improving the tools and exploring new technologies, the buzzwords these days, artificial intelligence, etc., that we will require to be much more efficient with the resources that we have at our disposal, but deliver a much more impact for the work that we do. All of this will be tested again in the very near future as we undergo the next round of mutual evaluation in the FATF. This is due to start in the middle of next year, around June 2026. And according to the current schedule, the next report will be discussed in the FATF in October 2027. So this means all the work that we've been busy with over the past 2 years during the grey listing process needs to continue and needs to be ramped up and scaled up as we improve the effectiveness of our system, and we hope we will then reap the rewards in this next round of evaluation for the hard work that has been happening over the last few years. That concludes my presentation, Honourable Chair. Thank you very much.
Thanks, FIC. Let's invite DBSA. I see in the platform there is the new chairman of the DBSA, Dr. Maswanda. I see somewhere there's Mr. Makura. He's still there so that we can welcome him officially. He has never been here before.
Yes, I think so. To my knowledge, he has joined. Dr. Makura, would you show your face and greet the committee, please, and the public?
Yes, Chair, I am here. Deputy Minister, I am here. David Makura, not Dr. Makura.
I thought you have obtained your PhD. I know you're doing it, so I thought you already have it. My apologies.
Thank you.
So it's work in progress. I'm sorry, Chair. My mistake.
I am ready.
Over to you. Through you, Chair. May I ask the DBSA to lead us on their annual report, and the chair of the board and the CEO will determine how they present the report. Over to you, Chair, of the DBSA.
Thank you very much, Chairperson of the Standing Committee on Finance and members of the Standing Committee the Deputy Ministers of Finance. I've been introduced already by our Deputy Minister. I am with the Chief Executive of the DBSA, Ms. Tumelo Musako, and the CFO of the DBSA, Ms. Zodwa Mbele. I am going to do some brief introduction on the mandate of the DBSA, and will hand over to the CEO, Tumelo Musako, to present our report. The first thing I would like to say, Chair, is that the DBSA is a development finance institution whose mandate derives from the DBSA Act 13 of 1997. The Act was amended in 2014 to just expand the scope of the jurisdiction where the board can conduct its legislative activities. The DBSA was established in 1983, and it has been conducting this legislative mandate, which is principally development, mobilization of finance and other resources, including technical support, appraising, planning, monitoring development projects, facilitating participation of the private sector and community organizations in development projects and programs, and providing technical assistance, particularly to municipalities. Yes, some national departments, but the big scope of technical assistance that the DBSA provide with regard to project planning, the identification, preparation, evaluation, and financing of these projects has been the big part of the DBSA's mandate. The DBSA also mobilizes funding and collaborate with other national as well as international and regional bodies in this scope area of work of development financing, largely economic development and infrastructure development. The next slide, basically, which is the last slide I will deal with and hand over to our Chief Executive, is that the value chain of the work of the DBSA, including the various sectors, include a key focus on planning, municipal assessments, including providing funding, helping municipalities to plan, provide funding to bulk infrastructure of municipalities, and in that process also assist municipalities in maintaining their infrastructure. I've already spoken about project preparation. That's a big area of the DBS's work, including getting infrastructure projects to bankability and then long-term financing. The big part of the DBSA's work is to also build infrastructure, design, construction of infrastructure projects in the area of social infrastructure, which is education and health and housing, in addition to the network industries and economic infrastructure. The key focus of investment and infrastructure development of the DBSA, 60% of that focus is on South Africa, and 40% is basically in Southern Africa and the different regions of the continent. As I said, the Act was amended in 2014, basically to just look at not just Southern Africa, because it's named the Development Bank of Southern Africa. The Act was amended to expand that scope also to the different regions of the continent. Our current investment activities, including development and infrastructure rollout activities in the areas of energy, transport, water and sanitation, digital infrastructure, that's the ICT areas, education and health, as well as human settlements. But we are part of the infrastructure ecosystem. The DBSA is not the only player in that area, so we cooperate and collaborate with other development finance institutions, but also other institutions of the state. We are a development finance institution, 100% owned by the state. National Treasury is our shareholder. I would like to, Chair, through you, ask Ms. Boitumelo Musako, our Chief Executive, to just take us to the next level on the strategy of the DBSA in line with its legislative mandate, and together with the CFO present our annual report and the results.
Okay.
Chief Executive, over to you.
Thank you, Chair. Good morning to the committee chair and all the members of the committee. In terms of our strategy, we are in the second year. I don't know if everyone can hear me. We are in the second year of our decadal strategy as the DBSA. And I think our chair has touched on our purpose and mandate. Our 4 strategic objectives in terms of our decadal strategy remain: accelerate development impact in a financially sustainable manner, the development of smart partnership, and being a fit-for-purpose organization. And when we look at the acceleration of the development impact, this then talks to our key strategic outcomes that we are expecting from the execution of our decadal strategy. That talks to inclusive economic expansion, climate resilient development, thought leadership, and project preparation factory. This is critical for us as an institution, simply because of the need in South Africa for infrastructure development and for the continent that we also serve. When it comes to project preparation factory, the way we are looking at it as an institution is, instead of doing, implementing infrastructure on a project by project basis, we are looking at developing infrastructure investment programs. And this we are seeing, for instance, with the opportunity that we have with the implementation of the PSP program on behalf of the Department of Transport, and, for instance, the IPP program as well that we have implemented before, and the student housing investment program. So a programmatic approach we are seeing as a key mechanism to ensure, to accelerate development impact and enable standardization and also participation by the private sector. The second one is on capable and strengthened municipalities. This is another key area for us, because we know that municipalities are a form of providing basic services to citizens with the provision of electricity, water, and waste removal. 30% of our book is funding to municipalities, but we do not only provide funding to municipalities, we also provide technical assistance services. I will make an example of what we call our Partner a District program that we started to implement 2 years ago, where we are currently working with it's 8 districts, where we've done a full infrastructure diagnostic, and we've also assessed the infrastructure needs in those districts as well. And we have currently even, we will be supporting the municipalities with preparation facilities so we can get their projects to bankability. Financial sustainability remains critical for us as well. Just transition advance. This is another key outcome where we are looking, at firstly ensuring that we have adequate programs as an institution to support transition. We developed what we call an embedded generation program, where we are supporting entities with self-generation of electricity, and in addition to that, we are looking at product diversification as well, where now DBSA has developed a trade finance product, but on a wholesale basis as phase 1, and we'll be looking to a much in phase 2. We will then be moving from a wholesale to more a business element. Regional integration and access through key sectors. This remains a priority for us, and what we're looking to do here is to support the creation of trade corridors and transmission corridors, especially within the SADC region. Sound governance and operational excellence remains a key priority and an outcome, and being a fit-for-purpose organization, we have just concluded our target operating model as an institution, developed a new structure as well. In addition to that, we are embarking on a digitization journey as an institution, and that is going relatively well. Can we go to the next slide? What I'd like to touch on briefly, I know that we are pressed for time, is with the decadal strategy and being in the second year of the decadal strategy, we are doing this strategy from a position of strength, and it is a growth strategy. DBSA is poised for growth. We have stability at the executive level and the board level. We have a culture of accountability, and that is robust frameworks for operation, compliance, legal, and risk. We are committed to ethical practices as an institution. We have a solid financial position as the DBSA. I mean, even in our in our 42 years of existence, we've had unqualified audit opinions, but as the AG would coin it, clean audit. So we have demonstrated a strong governance operationally as well. Now, in terms of our operational highlights for the year, we achieved infrastructure development support to the tune of 9.13 billion, and this goes across our value proposition in terms of our disbursements, the projects that we prepare, and infrastructure that we deliver on behalf of the state. We achieved a net profit of 5.3 billion, and our balance sheet is currently sitting at 121 billion. In terms of our development impact, we've had 36,000 learners benefiting from the work that we have done. We've trained youth, 1,643 youth, and we've supported 11,231 SMEs and created jobs to the tune of 37,099. When it comes to SMMEs funded, we funded as SMMEs to the tune of 4.8 billion, and we have supported we have spent on Black women-owned entities an amount of 2.6 billion. As I alluded to earlier, we achieved a clean audit. We are rated by Moody's and S&P as well, and we continue to have accreditation to the GCF and the GCF. I've already touched on the slide, and this shows the composition of the 91 billion, and shows the stack that builds to the 91 billion in terms of the work that we have done, the funds that we've catalyzed, the disbursements of 17.5 billion, infrastructure that we have delivered on behalf of the state at 5.2 billion. We did have a target of 5.6 billion that we had, but if we look at year on year, we actually have grown in double digits. In terms of our key performance indicators, we have achieved more than 80% of our key performance indicators. Next slide. Okay. Because I'm just going through. Next slide, CFO. I think you can then touch on the financial performance, CFO. Thank you.
Okay, thank you so much, members, for indulgence. Looking for my slides now. Can you see my slide?
Yes.
Okay, on the financial performance, thank you so much for your indulgence once again. So as the C has alluded, the bank has done very well with respect to the key performance targets, including the financial outcomes. If you look into all these ratios that we are projecting today, the net interest income and the net profit, she's already touched on that, and the key financial metrics in terms of the ROE and the net interest margins. I also want to just mention that the cost to income ratio, it may look like it's a red upward trajectory or downward trajectory, but it's not at the level where we're supposed to achieve. We would like to have this ratio higher than what is currently projected at 22%. We need to spend more on developmental outcomes in order to increase this ratio. So much as it's good for the financials, the board is always not convinced it's good enough because we still need to do more to deploy some of the expenses for development agenda. Just once again on the robust and sustainable growth in revenue, somewhat we have touched on it. We achieved revenue of about 13.5 billion. So in our language, the revenue is the interest income. So that's what was achieved. As you can see, the trend has been upward trajectory, despite the interest rate going down, but the bank still managed to lock some of the high interest rate portfolios in order to maintain the momentum of the growth. And then also on the strong profitability and resilience, which the CE has already touched on, the 5.3 billion. As you can see there, it's I think the first time we achieved that number in 2025. We also achieved the same, more or less, not far, at 5.2 billion in the previous years. And it's a number that is really showing that the bank, it's growing in the truest sense of the word. It's not benefiting from the market movement necessarily, but it's through also the development work that we are doing, the loans, the performance with respect to that, which we'll get to shortly. You will see that in 2020, there was a dip where we achieved 504 million because of the COVID. The circumstances were extraordinary and we had to provide more in terms of the impairment losses. We didn't sustain them, but we had to impair. we needed to provide ahead of losses crystallizing, but they didn't materialize in that fashion. Hence, there was a 10 in the profitability numbers. And then the next one is the cost to income ratio, the one that I was talking about. At some point, we would like to see this number going back to what we had witnessed around 2020, not because of we want COVID, but in this case, we want to spend more on development expenditure and some of the strategic initiatives so that it goes up. Because it does talk, much as it's a ratio that talks to efficiencies, bear in mind that we have a target of 35%. We should not spend more than 35%. That's where the limit is. So as you can see, it's far below the 35%. So much as we want to have a very good looking balance sheet or healthy balance sheet and income statement, but we also need to spend more within the limits as well. So that's really the context of it, looking the way it does. And then the next slide talks to the split. The chair had already indicated how we operate in different countries, including South Africa. Of the 113 billion, 70% is RSA. As you can see, 79 billion of the loans are in South Africa and 34 billion in these countries that have been clearly identified in the map. That's where our footprint is in different countries that make up that 34 billion of loans. And I think CE touched on this and the chair in terms of the sectors and the asset growth. This is just our entire gross loan book before we provide for any non-performing loans. Gross NPL, non-performing loans, that's what NPL stands for. As you can see, it's a very small percentage, and we do have a target range of about 6 to 9%. So this ratio is still within the range in terms of the performance of our loan book. Talks to the asset quality of the bank. On the strong position that was alluded to, cash liquidity at year end was about 15 billion in the bank account. In the previous year, it was about 10 billion. We also had to have more cash, in anticipating for so many unknowns in this financial year. And the strong capital base, which is the ratio, basically, we have a limit of leveraging our equity by 2.5 times. In this case, it's 78%. So as you can see, maximum we can leverage the capital is 250%. We are far from reaching that limit at 78%. So we can still stretch our balance sheet. The last bit of our discussion, which really is just some of the impact case studies that we are working on. It's just to complete the picture. When we talk about the work that we do, I think the stack that we showed earlier on of how we support, for instance, the IPP office, and some of the work that we also do from the transaction point of view, and also municipal funding that we like to also going forward focus on if the opportunities really that we see out there where we have invested as a bank, disbursements and some commitments. So commitments, it's what we have approved and signed but not yet disbursed, and the approval is what we have approved but not yet signed. So it does show that there's a healthy pipeline going forward in these various sectors that the bank needs to support. And also some of the PSP program, I think Minister Barbara Creasy was on I think it was on the news 2 days ago, where she was really also talking about the role of the PSPs and clarifying the role of the PSP within the transport logistics sector. And in here, we have been asked to set up a PSP project management unit within the DBSA to assist exactly what she was talking about across the transport sector, assisting PRASA and Transnet with respect to some of the initiatives that they would look to implement going forward. And we also received, I think, 100 million with respect to just for the setup to enable the work that Minister and the Ministry and the government want to pursue with respect to that. And then also what we are showing on this slide is the infrastructure development project. These are the projects that one of which we will be familiar with, some of the work that has already been done on behalf of government, which is parliamentary building and the rebuilding the new and the old, and numbers are there. I believe we are doing a great job, and hopefully we'll also be on time, because we are trying really our best to make sure that we are on time as well as some of the projects in Limpopo, the hospital that is meant to be completed by next 2028, and district hospital as well, in the same range that should be completed next year. And also further afield in terms of the...
With 4 minutes.
Yes, so we are done. It's the last slide. Kazungula project, water and sanitation, where we talk about, in addition to lending, we also assist or augment the capacity of the state and other regions to build projects through foreign funding. Thank you so much. That's the end of the slideshow.
Chair, may I just use a second to say that our biggest challenge going forward is to focus on supporting municipalities. I think that's what that decadal strategy, that's the 10-year strategy of the bank is, that a great deal of effort, investment, but also technical support of the institution from the board point of view is that we must focus on supporting municipalities, because that's where the infrastructure failures of our country are. So that's what I wanted to conclude with. All those efforts are going to shift towards focusing on supporting municipalities. Yes, some of the national departments are coming to us, but municipalities are our priority number one. Thank you, Chair.
Thank you, Mr. Makura and your team from DBSA. Honorable members, we are done with the second round of presentations. Questions, comments? Honorable Mazibuko, over to you.
Thank you very much, Chair. Thank you, Chair. Sorry, I thought I had unmuted. My apology, Chair. Chair, thank you very much. Let me start with IRBA, Chair. I think I have one question from them. From the 636 reportable irregularities reported at year end, which sector comprised a significant component of the reported matters? Maybe the second one on IRBA. Chair, with the current rising threats to the life of auditors due to corruption and crime syndicate linkages, what measures is IRBA taking with a view of enhancing the environment and to protect the identity, or measures to protect auditors so that they are able to promote and preserve ethical conduct? We have seen the new trends now of the killing of auditors. Hence my question, Chair. And then, Chair, on FIC, I think I only have one question. From the directives issued by FIC, Chair, what is the share of matters that deal with criminal cartels and other complex organizations for criminality, such as terrorism and the like? So if they can just give me information on that. And then, Chairperson, on the last one, on the DBSA presentation, as I welcome my former Premier, warm welcome my former Premier to lead the DBSA. Chair, noting the significant increase reported at 42.3 billion in project preparation and support, how much investment has been unlocked through the support, and which sectors constituted a significant share of this? Also noting that the National Treasury has revised the PPP regulations, Chair, to enable unsolicited bids. What risk does this pose for competition and vulnerability to abuse? What is the observation and assessment of the DBSA on unsolicited bids? My other question to DBSA would be what measures are required to fully optimize the parameters provided by Regulation 28 of the Pension Fund Act on the 45% infrastructure exposure? Chair, in our engagement with Old Mutual, they highlighted a challenge in relation to interest limitation rules of Section 23M. What limitations have the DBSA observed in relation to asset allocation for infrastructure development in our country, and what are their recommendations? And my last question for DBSA, Chair, is that the DBSA did not meet its targeted contribution to increase South Africa's fixed capital formation by about 400 million. What is the plan of the DBSA to significantly increase its capital investment in the short and medium term to contribute to the government's target of realizing a 3% economic growth rate? Because I think for us, it is key, the issue of economic growth. And I had a question on the municipalities, but the conclusion by the chair on the support for the municipalities has covered the question that I had noted in relation to the municipal support. I thank you, Chairperson.
Thank you, Honorable Mazibuko. Dr. Beck.
Thank you, Chair. The questions I have are, first of all, to IRBA and then to the DBSA. To IRBA, on page 9 of your annual report, I note that the number of investigations conducted is increasing, but unfortunately, the number of investigations finalized remains at 96. So it seems to me the flow through and finalization seems to be a bit of a problem. Is that a fair assessment, in your opinion? And if so, what's the plan? Second question is whether you're reverting your accumulated surplus to Treasury. And then the last question to IRBA is whether there are any ongoing completed or planned IRBA investigations related to audits concerning Enable Capital, which is, of course, talking about the transaction where the PIC lost 100 million rand and other investors also lost significant amounts. To the DBSA, in your role as an implementing agent, what percentages of projects are completed on time and on budget? And as an example, can you tell me what your latest delivery date for Parliament's rebuild is, and what's the latest total cost estimate as of today? I would like it then if you could tell us a bit more about the infrastructure fund. How many projects do you have in the pipeline? How many are ready? How long does it take to process a project on average? Also, on a point of clarity, am I correct in understanding that neither your role as an implementing agent nor your role as in the infrastructure fund features in your own KPIs? And if that's correct, it seems to me that these are both vital for the South African infrastructure ecosystem. And would you not argue then that they should be added to your KPIs? Lastly, Chair, I'd like to understand what the extent of the DBSA's relationship is with the sanctioned VEB-RF Russian bank. That entity initially reported and then denied signing a credit agreement or credit line with the DBSA last year. Instead, it seems as if some kind of a memorandum of understanding was in fact signed. Can you tell us what sort of information and engagement is taking place between the two entities, especially what engagements have taken place and are taking place in 2025? Thank you, Chair. Those are my questions.
Thanks, Dr. Beck. IRBA? Are there questions that you have to respond to? Over to you.
Thank you, Honourable Chair, and thank you to the members for the questions. I will respond first to Honourable Member Mazibuko. So on the first question around the reportable irregularities, so of the 600 reportable irregularities we received in 2025, about 1/3 of those go, or 2/3 of those are actually onwards presented to other regulators. And 44% of these RIs are related to income tax and VAT, and about 24% are Companies Act transgressions or non-compliance. So what we do is the auditors would report the issue to management and to those charged with governance at these companies. They will get an opportunity to remediate or investigate the matter. In the absence of that, if the auditor is not convinced that sufficient actions have been taken by management, it is then called an ongoing RI, which we then receive and assess, and we then report to the relevant authority. So yeah, 44% goes to income tax and VAT non-compliance, and 24% on Companies Act. For example, if a company fails to submit financial statements within the prescribed time, those are some of the transgressions that we then handle. There is a report, Chair and Honourable Member, that we've issued, the first one last year, which I can avail to you, that gives you a detailed breakdown of all the RIs. And what we're doing now is we will now issue this report on an annual basis, showing which entities are sitting on which investigations, and getting that feedback from them on the status of those referrals, I think is an important step for us to close the loop on that process. On the question around the threatening of the lives of auditors, this is quite a complex matter because it relates to criminality, which is very difficult as an administrative organization to address. I think what we need to consider, though, is that the word auditor is in the news used a bit loosely. For example, the reference to auditor, it could be an internal auditor, it could be a forensic auditor. And I think the lives that have been threatened or been taken has mostly been in the public sector. For example, the threats against the Auditor General and their staff, and I think the killing of auditors in terms of internal auditors. So it is not that directly linked to the IRBA. We only regulate auditors in the private sector, not the Auditor General in the public sector. However, we are concerned about the ability of auditors to do their work unfettered and without fear. At the moment, it is incumbent on the firms to make sure that if they take on clients where there's a risk or a safety risk for their auditors, that they do put the necessary safety measures in place to protect their auditors from physical harm. As the regulator, because we're not on the ground, we can only advocate for the audit firms to take all proper and necessary actions to protect their auditors. But unfortunately, we're in a society where this is becoming a problem beyond that can not be addressed by words. I guess there needs to be action by law enforcement as well to protect these auditors, because we will get into a situation where auditors will not be able to report things freely anymore, and then that will take us backwards. So I hope that answers your question. We cannot guarantee the physical safety of an auditor. That is incumbent on the firm to make sure that they do protect their staff and their directors. I will then move to the question by Honourable Member Dr. Burke on page 9. So the flow through on investigations, you will see a slight decline in the number of investigations over time. And this is purely for the reason that about 3 or 4 years ago, we embarked on a strategy to address the backlog in investigations. And what we've done is we've increased our capacity, the number of investigators, etc. And also we changed our act back in 2021, whereby non-audit matters, for example, if an auditor there's a complaint against an auditor who is also a CA, but it relates to a non-audit matter. For example, it could relate to a deceased estate or something like that. The Act allows us then to refer that matter to the relevant professional body, which to date was SAICA. So the number of investigations that then put through our system is becoming, there is a slight decline in the number, because we've caught up with our, at the moment we're sitting at a situation where we've caught up with our backlogs. We are in a situation where soon that when we receive a complaint, we will be able to immediately investigate that complaint. And you will see from the annual report, the targets for next year, for example, comes down to 60 investigations, because we have now, you could say, reset to normal levels. We wanted to get those very old matters out of the way, so we get to a more normal situation again, without that undue pressure on the investigators. So there is no problem, Honourable Member Burke, in the investigation. I think we are quite pleased with the progress that we've made and the fact that we can wrap up investigations much quicker. We're also concerned about these investigations hanging over the heads of auditors, because they could also be found not guilty. So that is an important perspective. In terms of the accumulated surplus, and thank you for this question, Honourable Member, this is an important aspect that you're touching on. So, as you know, the PFMA requires us as an entity to not budget for a surplus, but because we have to budget for unforeseen disciplinary hearings, for example, we have upcoming disciplinary hearings that can really be very costly. So we have to budget for the worst case scenario that we will go into full disciplinary processes and budget for those. But it sometimes happens that there's settlement on these matters before it goes to a hearing, which is allowed in terms of our due process, which then means that a matter can be settled without going to a hearing. And immediately that results in savings going into our accumulated reserve. So to date, and I would say for more than over the last 10 years, Treasury we have to apply every year to National Treasury to retain our reserves, which we believe, if you look at the composition of our revenues, we get about 22% of our revenue from grants. The rest we do get from the firms in different formats or forms. So we believe that it's important that we continue to retain these reserves to buffer our ability to cover the costs of potential expensive disciplinary hearings. I think if you look at, for example, African Bank, and that was a very costly and long drawn out process, and we have to be ready for that. So fortunately, Treasury has heeded our request to retain our reserves, and we just received our letter 2 weeks ago to continue to retain our reserves. And a big portion of that reserves, between 20 and 40%, is now earmarked for or ring-fenced purely for enforcement, so that we don't find ourselves out of pocket when we need to prosecute a case. I think on your last question, I must admit, Honourable Member Burke, that I don't have a lot of information on Enable Capital and what the current situation there is. I do want to say that we are aware of this issue, and especially what's happening in the news, and our investigations is currently analysing the need to open an investigation into these. As you can understand, these things are often quite complex. You have to find out who was the partner, what year are we talking about of the audit. So it's a bit early days for us to share anything publicly around where we are on this, but we are certainly aware of this. It recently came to our attention as well. Unfortunately, I can't divulge more on this matter at this stage. I hope that answers the questions. Thank you, Chair.
Chair, will you allow me to make a quick tongue-in-cheek comment?
Let's allow all of them to respond to questions.
No problem.
We're done with IRBA. FAIS, are there questions for you?
Thank you, Honourable Chair. Yes, I believe there's one question from Honourable Masibuku on the breakdown of the information that we've referred for further investigation. On page 57 of our annual report, there is a table that gives a breakdown of the crime types that we believe are involved in those referrals that we've made to law enforcement, both on request and on our own initiative. One should keep in mind, though, that this is based on suspicion. In other words, the actual factual information will only be uncovered later on as those investigations unfold. But we were at least able to identify certain types of crime categories in the information that we've referred. In that table, there's a mention of 30 cases that we've referred that we could identify are linked to organized criminal syndicates. But if one looks at the other crime categories, many of those are the types of crime that is associated with criminal organizations. And it's highly likely that those are also activities that involve criminal syndicates. And these are things like drug trafficking, environmental crimes, human trafficking, extortion. If one adds up those, it comes to around 390 to 400 cases that we've referred, which is quite possibly linked to organized crime. On terrorism, this is an area where we've actually seen quite an increase in information sharing, both on request and on our own initiative with law enforcement. There were, in the previous financial year, 346 cases where we've shared information on suspected terrorist financing. In other words, where we believe the funding is raised in South Africa that is destined for use by terrorist organizations, either in or outside of the country. Again, if one looks at some of the other crime types like extortion, public violence, and so forth, that number is probably closer to around the 360, 365 mark, where cases that we've identified and made referrals could potentially be linked to terrorism or terrorist financing. Then if one looks at the money laundering offences, these could well also potentially link to organised crime to a large extent. And we've seen one or two instances where even terror financing cases eventually turn out to be linked to money laundering. And of those, it's in the order of 1,880 to 1,890 cases that we've referred that involve suspicions of money laundering. So I hope that answers the question. Thank you, Honourable Chair.
Thank you. DBSA.
Thank you. Thank you very much, Chairperson. We were asked questions by Honourable Mazibuko and Dr. Beck. On the questions related to risk, I would like to ask a member of our board who chairs the Audit and Risk Committee, who is in the meeting, part of our delegation, Bongani Gwababa, to just deal with how the DBSA deals with risk assurance and the entire risk-related environment. As you would know, infrastructure delivery and just generally investment, it involves a great deal of risk. The bigger the infrastructure and the bigger the budget spent on infrastructure, the many risks related to that. So the board and management deal with risk in a very concerted way. So he will deal with that, and the CE will deal with, the chief executive will deal with other related issues, except with that the question of infrastructure delivery on time and on budget. I will request, Chair, that the executive responsible for infrastructure delivery, Chweni Rampele, is here. He also manages specifically the Parliament, the project related to the rebuilding of Parliament. There was that very pointed question raised by Dr. Beck there. So may I call on our board member, Bongani, to just deal with issues of risk. We will conclude with the Chief Executive.
Thank you, Chair. And am I clear and understood?
Yes.
Yes, thank you. Thanks for the opportunity. In terms of risks, as the Chief Executive well articulated, it's something we take extremely seriously, because at a basic level, risk is managing your ability or lack of ability to deliver on your strategy. So we have this function as a separate function, independent function, which reviews all the risks in the organization, be it strategic risks and operational risks, and then we evaluate these at the audit committee. We have specific meetings for risk to make sure that it's not drowned by other items on the agenda. But obviously, by the time it comes to the board, it would have been gone through the executives as well. But what we do, we assess as to, in terms of the risk they see as the executive, is that what we see also as a board, because we don't just rubber stamp. So we evaluate from time to time as to, is the risk appropriate, and take it back. A classic example is liquidity, which was a big risk during COVID. But our treasurer has been doing extremely well in raising funds in the market, and which unfortunately not many SOEs are able to do. So we have reduced that risk to low, because we've got a big availability to liquidity. Lastly, as far as the projects are concerned, it's analyzed on a project-by-project basis to find out what the risks are. And if I can speak quickly for Infrastructure Fund, which I also chair, is that a very good work is done by the Infrastructure Fund, which will soon be called IFISA once the MOU is signed. But the problem which is there from time to time is that the funds then go to the vendor. Let's say, for instance, a department. That department then doesn't follow what you would have agreed with the with National Treasury. So I think it's important that all the funds flow through to the Infrastructure Fund, obviously with the authority of the accounting officer, to make sure that delivery happens as planned. I'll stop there, Chair, unless if there are other clarity required.
Thank you, Bongani. Can we just have that training? Can you deal with the assurances on delivery of projects on time and on budget? What the capacity of the DBSA is and experience?
Thank you so much. Thank you so much, Chair. I just want to also show my face. Thank you so much, Chair, and thank you to my Chair and members. There are three questions that I will address. One is the issue around the project that in a capacity to deal with the more project implementation. I think we have almost over 75 professionals. That stems from QSs, stems from construction project managers and so on. And I think in terms of the completion of projects, I think part of what I need to put in here is that most of as we do the implementing agency work, we also do, as we do this on behalf of the departments, it involves the transfer of funds to the DBSA. And I'm going to give an example in terms of where funds has flown to the DBSA, which are called the flow of funds, where we finished most of all those projects within time and within budget. And that basically is because the funds has been transferred to the DBSA, and we are able to then be in a position to manage the payment of the contractors on time, and then as well as making sure that we reconcile as quick as we can. So in that regard, we have done a number of projects. For example, we have done the one military hospital in terms of the high care and intensive care. That project, because the defense gave us the money, in terms of the project itself, we could manage to complete that project, which was supposed to be 6 months, and then 3 months we did it in 7 weeks. So we have also, I can give examples like when we dealt with Parliament. When we dealt with Parliament, we had to do the project which we call offices for members of Parliament. So we did that 155 offices within a short space of time, which we've done it in 6 weeks again. So I think what I want to say to members is that where there's a flow of funds to that, DBSA achieved mostly 100% of the completion of those projects. There are projects, of course, that we are involved with where funds are not flowing as we're supposed to flow. And I think that is the real impediment. And that links to one of Honorable Mazibuko's point of then saying there is a 400 million that was not been achieved. If you look at it, it is because the funds to fund for that particular work has not came through, but it came very late in the system. So I think it's a question of our discussions and agreements with the departments in terms of the flow of funds. So I think on the completion, I can assure members to then say where we get projects where funds flows, we complete those particular projects within budget, and most of the time, even before the time that they have been scheduled to be done. So there was another point around the unsolicited bids that has been spoken about in relation to the PPP regulations as such. And I think just recently, as the DBSA, we did a review of ICM policy time to time as we do that, and we then considered this whole issue around how we are going to deal with unsolicited bids. We haven't really had an experience in terms of receiving an unsolicited bid from any institution before, but we again move along and align with the fact that obviously this brings innovation but we have a particular criteria that as a DBSA we have put in through in guided by our issues as it relates to how the whole regulation is going on the PPPs. So we're really circumspect of the fact that we have to be very clear to then say this unsolicited bids, this is how we're going to be treating them in that regard. So that is the just to assure members to then say we have put in that particular policy that has been passed. And now the third element around the Parliament. On the issue of Parliament, we started in April for the active construction of Parliament, and for members to acknowledge that we're doing is the new assembly and the old assembly. So as we look at the Parliament reconstruction, it's just the old and the new assembly. And in that regard, on the construction of the new assembly as well as the old assembly, we're very clear. We've provided, we made it a 20 months program, working it on an accelerated basis. So we have defined 4 milestones in this regard. It's a 6 months milestone up until September to then say we must be working underground, members, because under Parliament itself there is the basements and all of that. So we're pulling up the structures because we are adding 2 floors on top of the current structure. So we've redesigned the Parliament completely. So we're adding 2 floors plus the roof at the top. So you're going to have floor 7. Now you are ending at floor 4. Or 5, then we're going to have 6 and 7, and then we have that. So we are now anchoring the building under. So by September we are clear to then say we should be done with the most of the concrete work, which we have done. So for now we are then casting in terms of ensuring that the chamber has been created. So members will start to see the chamber growing at that point in time, because for now you can't see it as it is. So in 12 months, we are very clear that we would want to then be starting to deal with all of the floors, beginning to deal with the finishing of the floors and the finishes on the floors. And in 20 months, we believe that we'll be finalizing the ICT and the broadcasting in that particular in the chambers and parliament itself. So we keep on providing this support. So in essence, we are saying that by November, we should really be looking at practical completion, and December we'll just be doing some snaking in January, and then we're hoping that fully commissioning will then be done probably in the beginning of February 2027. But the practical completion, we're aiming for November, that everything is done, and then and the ICT component and broadcasting is in place. So, Chair, I think from my side, I might have taken too long, but I think it's just to explain the Parliament process. Thank you so much.
Yes, through you, Chair, I beg for your mercy to ask that our Chief Executive deals with the last set of questions that are remaining.
Thank you, Chair. I will try to provide answers that then respond to most of the questions. The first thing I want to touch on is gross capital formation. Firstly, yes, I think Trini touched on that we were 400 million short in terms of meeting our infrastructure delivery target. However, I would like the members to note that we did increase from last year by 13% infrastructure delivery from the 2024 year to the 2025 year. Even though we didn't meet target, we did have a double-digit increase to the tune of 13%. The second thing I want to touch on is gross capital formation and our role as the DBSA. We are required, and this is something where we play a catalytic role to enable infrastructure development. And that's why in the presentation, the number that you saw of the 91.3 billion are, on the different ways we achieve that. The project preparation that we are talking to of the 42 billion is the measurement, because when we develop programs, when those programs or the investments within those programs reach financial close, that's when we then recognize the impact. The 42 billion actually relates to the transactions that have reached financial close from the IPP program. And this is an area that we are looking to grow over time. And this also talks to how we are seeing the opportunity in how to have a structured approach, for instance, to unsolicited bids. We can all admit that Operation Vulindlela and the reforms around Operation Vulindlela have created opportunities in terms of infrastructure investment. What we have done as a bank, we have a structured approach to enable private sector participation in infrastructure by the creation of these programs. For instance, we have a water partnership program, which is a program that has been designed to drive investment in water reuse and to assist and support and structure transactions to support municipalities to manage non-revenue water, to actually, reduce non-revenue water. That's just one example. It's a collaboration with the Department of Water and Sanitation. The PSP program that we have touched on, the embedded generation program that we have touched on. When we create these programs in us playing our catalytic role, it is a structured approach to actually enable private sector participation in these investment programs. This now links into the question that was asked around Regulation 28. Around Regulation 2028, what I'd like to highlight is pension funds participate in infrastructure through support of listed instruments. So, for example, through asset managers. They participate, let's say, through investment in private equity funds that support infrastructure. In the context of DBSA, they would support us when we list bonds, because we have a bond program on the JSE. So that is how they participate through listed instruments. And that is a mechanism that has actually been created. What we need, and this is a discussion that we have been having, is how to then, finding ways to collaborate innovatively to then find ways of greater, a more wider participation by the pension funds in infrastructure that is not necessarily limited only to listed instruments, and this is a discussion that is currently ongoing. It is not just specific to South Africa. It is a global discussion around mobilizing funds for infrastructure, especially on the African continent, mobilizing African capital for African infrastructure. So currently they participate through a bond through bonds. For instance, 2 weeks ago we issued a bond. I think it was oversubscribed 4 times for the DBSA, and those funds that we then raise, we will then we use the funds to then support and fund infrastructure projects. So that's then is an area that is we definitely need that collaborative innovation on the mechanisms and the instruments. What is currently being discussed is a credit guarantee vehicle mechanism as well. I think our deputy minister touched on that as well when he presented the annual results of the DBSA. The other thing that I'd like to I think Chweni touched on the other items there. The other thing I want to touch on is the IF. The IF has made significant progress with the BFI approvals to the tune of 37.6 billion to support projects. There's more than 20 projects in the pipeline, ranging across transportation, water sanitation, human settlement, and student housing. What I'd like to highlight, and these are projects, with a value of over 100 billion. What I'd like to highlight is a key success in that before we had BFI windows, one BFI window a year, and with the necessity and the progress that the IF is making, we now have 3 BFI. I think it's 3 BFI windows that the National Treasury has opened up. This provides an opportunity, to then process these transactions so that we can actually get to a point where IF then raises the funds and then implements reaches financial close in terms of blending with what has then been approved by a BFI with private funds. The last thing I want to touch on is, I think I've touched on the gross capital formation and our contribution towards that. The last thing I want to touch on is what was asked on VEB. South Africa has been part of BRICS, and as part of BRICS, there's what we call the interbank cooperation. This is where the DFIs of representing the BRICS countries have a platform of collaboration. What I'd like to to highlight is that the platform of the framework of this collaboration does not in any way constitute any legal, financial, or other obligation by any member. It's a collaboration that talks about, sharing knowledge, possibilities of, how do we enable product diversification. So it's a framework. And last year in 2024, this framework was then amended firstly to include the provision for new members within BRICS, and additionally to update the contact details of the existing members. I emphasize that there was no credit line that was signed with VEB. DBSA is an institution that prides itself in its strong governance and its strength globally. We leverage our own capital to raise money in capital markets, not only in South Africa, but globally. We have financial relationships with international asset managers, with other multilateral development banks, and we continue to raise these funds globally. So for us, it is critical that we ensure that the arrangements that we enter into do not in any way compromise that. And that's why I re-emphasize that there was no credit line, that was signed with VEB. Thank you. Thank you, Chair.
Chairperson, back to you. We are done on our side.
Okay. Let me take Honorable Mauta. Dr. Beck, are you still there? It's like he has left.
I'm here, Chair. We can just ask for written responses, which will follow up via the Secretary.
Okay, thanks. Honorable Mauta.
Thank you so much, Chair. I appreciate your indulgence. I was kicked out by the network. At home, came to see my mother, who's 73 years old. So I had to bring medication for her, and I'm stuck here. It's raining. Every time it rains, the network goes because the electricity goes. So maybe Dr. Masondo can take it up with Dr. Ramokhoba to assist us at Bizilisulijang village. Chair, I've got a few questions for FAIS, IRBA, and DBSA. And I'm going to start with FAIS. In terms of tender corruption, Chair, the killing of whistleblower Mebabita Dikoran was linked to suspicious payments from Tembisa hospital tenders. And yet individuals implicated in the matter were still able to move large sums of money through the banking system. So how is it possible that such movements were not detected or flagged early by the FIC or the commercial banks that report to it? What weaknesses exist in the collaboration between the FIC, the banks, and the law enforcement that allow proceeds of corruption to flow unchecked for such a long period of time? Chair, there's also a growing perception that banks and insurance companies unfairly target Black people, closing accounts or flagging them for minor compliance issues, while others implicated in serious corruption are left untouched. So, what steps, sorry, Chair. Chair, can you hear me?
Very well, you're loud and clear.
Okay. So has the FIC ever investigated whether there is racial or economic bias in how financial institutions apply the FIC Act? What mechanisms exist for the FIC to hold these institutions accountable if they use compliance regulations to discriminate? in terms of unequal application of the law, it appears that when it comes to high-profile individuals or politically connected persons, the rules of financial oversight simply does not apply. The public continues to see how senior officials, politicians, and business elites evade scrutiny, including cases such as the Phala and others. Yet it remains unclear whether the FIC was ever involved or acted on these matters because they are simply quiet and as if they are bystanders. So how does the FIC decide which cases to prioritize? And is there any political filter that determines who gets investigated in this beautiful country of ours? Chair, recently Sanlam Collective Investments was fined 10.6 million for failing to comply with anti-money laundering laws, of which 3.6 million was suspended. Does the FIC believe that such fines are effective deterrents when financial institutions have annual revenues large enough to budget for these penalties as operational costs? Has the FIC considered recommending stronger sanctions such as license suspension or senior management accountability where systemic non-compliance is found? With regards to the illicit and organized economy, the illegal mining, fuel smuggling, and cash-based trade networks are now operating as organized economies with deep criminal and political links. The problem is no longer about small-scale miners trying to survive. It involves criminally connected operations with international money flows. So what role has the FIC played in tracing these networks, and how many referrals or financial profiles have been developed for law enforcement? What are the obstacles that prevent the conversion of financial intelligence into actual arrests and asset recoveries? The last question to FIC is, what is the conversion rate between financial intelligence reports produced by FIC and cases that result in actual prosecution or asset forfeiture? I'll turn to IRBA. In terms of the systemic risks in the audit profession and protection of auditors, Chair, the killing and intimidation of auditors, particularly those engaged in forensic audits and municipal investigations, represents a new form of state and criminal capture. What steps has IRBA taken in collaboration with law enforcement agencies to protect registered auditors and audit firm staff who face threats due to exposure of corruption and irregular expenditure in local government audits? Has IRBA conducted a risk assessment or incident tracking system for threats or attacks on auditors? And is there a mechanism to escalate such risks to the SAPS for coordinated protection? An auditor was killed recently in Ekurhuleni for doing his job not so long ago. If this is not kept, a lot of auditors are going to be discouraged, Chair, and this corruption will not be exposed and individuals will not be held accountable. IRBA's latest data shows that only 3,462 registered auditors and 1,579 firms with fewer than 2,000 audits classified as public interest entities. At the same time, audit quality indicators improved from 38% in 2019 to 45% in 2024. But there are warnings of capacity pressure and talent pipeline fragility in the institution. So how sustainable is this improvement in audit quality when the number of auditors continues to decline and the professionals remain dominated by a handful of large firms? Has IRBA conducted any modeling or forecasting to determine the critical auditor to entity ratio beyond which audit quality and independence could deteriorate, particularly in municipalities and state-owned enterprises? Chair, to the DBSA, which is appointed to restore Parliament with a big tender of 4 billion rands. Known for who they are, the first thing they did was to postpone the deadline. We were told, we've always been told, Chair, I sit in the JSC FMP, and we were told that the Parliament will be back to being operational this year. But the recent report now suggests that it could even be in 2027. Now, that becomes worrisome. The DBSA continues to have projects who go beyond what has been budgeted for in terms of time and resource. So there are a lot of infrastructure projects that DBA outsource, and people appointed at the site level exploit workers who are not properly paid and sometimes are not even registered. We've even raised a matter with DBSA, but they simply dismissed it. There is a project in Vredefort and a company appointed by DBSA on a project called Durabi. DBSA's name is there, but because of all irregularities, there is corruption. Now, who can we trust if our very own DBSA finds itself entangled in criminal activities, Chair? So those are our issues for now. We rejected the appointment of Ntate Makhura because we are worried that the 4 billion will disappear in the air. Ntate Makhura must reassure us that he's there to make sure that the 4 billion is spent properly, and we see the fruits of what we paid for. Value for money, Ntate Makhura. I thank you, Chair.
Thank you. At the beginning, Moto, we welcomed the new chairman of the DBSA. So if the political party that you represent has an issue, that is something else. But as a standing committee, we welcome his appointment. Before you take the floor, FAIS, DBSA, and IRBA, just 2 questions from my side. I see DBSA, you are doing quite well in terms of empowering women and SMEs. Do you have a program for young people, young entrepreneurs, young contractors, young people in construction? Because this country is facing a serious challenge of youth who are not working, not only because they don't have skills, but today we talk of so many young graduates who are unemployed. Do you have incubation programs in the construction sector? Because we can't expect youth to have experience if they are not incubated. And then every time they come and borrow money or whatever assistance they want from the bank, then you tell them that you don't have experience. Where will they get that experience if there's no incubation? Tell me about what you are doing in regard to tackling the problem of young or youth unemployment in the construction sector. I hear the chairperson saying that you want to put more focus now on local government, which we welcome. When I look at your profile, you seem to be quite very active in other jurisdictions, working with, for instance, United Cities and local government of Africa. So back home here, your entry or putting more focus on local government, how do you want to do that? Do you come through COGTA, or you go there on your own with the municipality? In Collins Chawani, where I come from, Collins Chawani approaches you directly, or does it come through COGTA, or what's the arrangement like? Because municipalities do have programs with DWS, that's water and sanitation, public works, and Department of Transport, and COGTA also has its own agency. I think it's called IMSA or something like that. Its offices are in Centurion, if they are still there. I've interacted with them many years ago. And where is SALGA's role in the scheme of things in this regard? Let's start with IRBA, come FAIS, and then DBSA. IRBA, over to you.
Thank you very much, Honourable Chair. And Honourable Mautwe, thank you very much for your relevant question. So on the first question around the risk around the safety of auditors and the steps taken, I think I did respond earlier to a similar question by Honourable Member Mazibuko. But yeah, just to mention that some clarity. So private sector, as a regulator of private sector auditors, and remember, we do not regulate AG. They are a supreme audit institution. And I think these a lot of these killings and threatenings, etc., is happening with not our members, non-auditor members. So, for example, the Ekurhuleni auditor is referred to as an auditor, but he was an internal auditor, and we do not regulate internal audit or any other bodies or forensic auditors at the moment. But be that as it may, what we are aware of is that, you know, if there's any sort of issue, the firms will report it to us, and we haven't had any such reports from our registered audit firms. The onus is on the firms to make sure that, you know, they take on clients that has integrity and clients that don't pose a physical risk to their auditors. So it's part of their risk assessment process in taking on clients. And secondly, it is the firm's responsibility to ensure the physical safety of their partners and their audit teams. As the IRBA, we are at this stage not that concerned about the safety of auditors on our register. I think the issue is more around the safety of the Auditor General staff at the municipalities and some public entities where there's safety risks, and as well as staff that are referred to as auditors that are maybe internal auditors, etc. Those professional bodies will also need to consider that. We certainly don't condone this, and we believe that there is a risk. And I believe my board member, Ms. Mshengo, also would like to add something on that. And then I would come back to your second question with your permission, Chair.
Thank you, Imre. Thank you, Chair. So just on the issue of safety of auditors, I'd also like to add, Chair, I think Imre did mention it earlier, that there is a wider financial reporting ecosystem that is at play. So when we look at that, there are various lines of defense within institutions leading up to the audit, which is right at the end of the value chain. So the issue that the member is bringing across happens right at the end, and it's really a symptom of underlying concerns that should really be addressed at source. And that's the point that I'd just like to raise, that it's not only the responsibility of the auditors, but every player in the ecosystem is also responsible. So important to note is that at organizational level, there's got to be the right levels of controls, the right people in place, as Imre was saying as well, to ensure that it prevents these kind of situations from happening. So when there is wrongdoing, this should be picked up as part of the 3 lines of defense, for example, that exist within the organization, and not have to wait until the audit process right at the end, because we do need to deal with the cause and not only the symptoms right at the end. Thank you, Chair.
Thank you. Thank you. And then, Chair, I would go to the second question of Honourable Member Mautwe. And this is on the reducing number of auditors and the pipeline. I think it's a good question because looking from the outside, it might appear that there's a crisis, but I would like to say that at the moment, we do not see this as a crisis. I think the reducing number of auditors, there are many factors to consider, especially the fact that our economy is not growing, and post-COVID, a lot of small companies have closed down, not needing audits. So all of these factors do play a role. At this stage, I have not had I was not contacted by any company saying we cannot find an auditor. In my last 5 years, I've never received such news. And secondly, also the firms are not telling us that they can't find people to do their audits. I think they manage their succession planning and their capacity of signing partners very well. And I don't foresee any systemic issues in this regard. What we have done, though, in terms of our new 5-year strategy is we've embarked on a pipeline strategy where we engage very closely with other role players in the ecosystem. For example, universities, schools, and the professional bodies. We do a lot of outreach events and efforts to motivate younger people to choose auditing and accounting as a career. We explain to them the social value of audit and in the economy. So short answer is we are doing some research now. We have a strategy that will be rolling out over the next 2 years. But at the moment, we do not feel there's a crisis and that the quality is actually improving. We also seeing an uptick in the pipeline. I did mention earlier that our candidate auditors, the number of candidate auditors have grown significantly, meaning the firms are taking on more trainee auditors and training them up to become partners, which is very good. And I think we're working quite closely with the firms and tracking this as well with them through our monitoring process and through our education and transformation department. I think some of your questions might relate significantly more to public sector. But at the moment, one thing that I can say that we are seeing that is a bit of a concern is that we do see de-risking by the big four firms, whereby they are resigning from audits, from listed audits even, and then those audits being taken up by small firms that don't necessarily have the capacity or the competency to perform those audits. And our inspections, we follow a risk-based inspections approach, and our inspections do indicate that some smaller auditors are not capable of performing these huge audits. What we're doing about that is obviously we're reaching out to audit committees, because audit committees are the ones that make these appointments of the smaller firms, and we are making them aware of the risks in appointing a smaller firm and what they need to look out for when appointing a smaller firm. So it's something that we do monitor. That is of concern to us, and we will be focusing on that in terms of our inspections much more closer over the next year or 2 years. Thank you, Chair.
Thanks. FAIS.
Thank you, Honourable Chair. So I'll try to answer the questions as best as possible. Firstly, on tender corruption, the FIC has identified that this is an area where our financial institutions do not necessarily or have enough contextual information to understand the transaction flows through the accounts of their customers. Specifically on the Tembisa Hospital, I can't comment on the particular case, but we can confirm that there is a number of reports that the FIC had received and that we have been working closely with the investigating officers on producing the financial intelligence that they require. But we had to undertake a review recently, generally on the issue of tender corruption and fraud, or procurement corruption and fraud. and how we can improve the system for identifying these activities earlier in the process and disrupt that activity before the loss to the state becomes significant. We formed a very close partnership with the banks under the umbrella of the SAMLET Public-Private Partnership, where this is a particular specific work stream, procurement, fraud and corruption, where the FIC is now producing and sharing information from our analysis processes with the banks for them to take and apply in their transaction monitoring systems and identify the indicators and red flags that might point to instances of the proceeds from tender and fraud and corruption going through their accounts, and for them then to report those to the FIC. So we are starting to see the early results of this. This is a fairly recent project that we've started with the banks. One of the areas that we've also seen that also touches on some of the other questions on the conversion of this intelligence to investigation, particularly in this area where the financial flow investigation is of information or evidence is crucial for the success of the investigation. We find that there's still a lack of skills and expertise in our investigating authorities to take the information on financial flows, the intelligence information, and very much particularly in relation to tender corruption and fraud, but more generally as well, and use that intelligence to uncover the evidence that is required for a successful investigation that can then support a prosecution. One of the things that the FIC has been doing to address this is, as I've also mentioned in the presentation earlier, is to form closer partnerships with our investigating authorities, particularly the Asset Recovery Hub, where we now have the Asset Forfeiture Unit, investigators from the Hawks, and together with the analysts from the FIC in our offices, working on a side-by-side and daily basis. And also the Fusion Center, also based in our offices, where we work side by side with the law enforcement agencies, particularly on matters such as the Tembisa Hospital, as an example. We found if we can shorten the communication lines and understand each other's processes much better in these sort of task force collaborations, we improve our chances of success of converting the intelligence into evidence significantly. We don't have a conversion rate. That's something that we are highly dependent on the feedback that we receive from the investigators on what happens downstream in their investigations, to help us understand what the success factor is that they've achieved with the information that we've shared with them. The one area where we can directly see those successes is in the Asset Forfeiture Unit's work, which I've mentioned in the presentation earlier. We've also now established the forensic capability to take our process of producing the evidence one step further and actually produce the evidence ourselves based on the investigations that are done by our law enforcement agencies. So we work side by side again in the forensic capacity with our investigators. They gather the evidence, bring it back to us, and we perform the expert analysis on that to produce the forensic accounting evidence that they need. So there are various initiatives for us to address this skills gap, but this is something that requires ongoing attention across all our agencies in the FIC and also in our law enforcement agencies. On the closing of accounts, the FIC does not monitor the closing of accounts by institutions. That is the domain of the Conduct Authority as a customer protection mechanism, and also from a prudential perspective for the Prudential Authority in the Reserve Bank. The FIC has in the past, on rare occasions, come across instances where we saw that institutions in the financial sector are applying an overly strict approach to compliance with the FIC Act. And where we find these instances, we have discussions with our colleagues in the Financial Sector Conduct Authority or in the Prudential Authority to bring this to their attention. But the closing of accounts is not a matter that is subject to supervision by the FIC itself. And we do not necessarily get reports or information on that through the systems where institutions report their suspicious transactions to the FIC. The FIC certainly does not have a filter for politically exposed persons or political activity or people involved in the political domain in the matters that we refer for investigation. We can only refer matters for investigation where we believe there is criminal activity happening, at least a suspicion that points to criminal activity, and where there might be proceeds generated from that activity. And that's the guiding line that we apply when we identify matters for referral for investigation. I think another question was on the adequacy of fines. The fine, for instance, on Sanlam would have been imposed by the Prudential Authority. The Prudential Authority, the Financial Surveillance Department in the Reserve Bank, the Financial Sector Conduct Authority, and the FIC all apply fines in respect of different categories of institutions that are under our respective supervision mandates. One of the areas that we as South African authorities had to address in the grey listing process was to improve the dissuasiveness of the penalties that are imposed for non-compliance with the FIC Act. And that was something that we were able to satisfy the reviewers during this process, where we had made the necessary improvements. And the way we track that and confirm that is to see and follow up inspections and subsequent to sanctions being imposed, how the institutions have improved their compliance and what measures they've put in place to avoid a recurrence of the failures that led to the sanctions being imposed. So it's not necessarily about the size of the penalty, but more the long-term review and the consequence of the penalty that will be followed up by future supervision by either of these supervisory bodies. Lastly, on illegal mining, this is a high priority investigation area for our law enforcement agencies, especially in the Hawks, and the FIC collaborates very closely with the Hawks on the ongoing investigations in this. In our annual report, we refer to 15 instances where we've passed financial intelligence to the Hawks, specifically linked to illegal mining. But as I've said earlier, because the referral information from the FIC is based on suspicion, many of the other referrals that we've passed on are highly likely to be linked to the same syndicates and organized crime entities that are also involved in other criminal activities. So that is an ongoing focus area for the FIC to work alongside our law enforcement partners in supporting the investigations in this area. Chair, I hope I've covered all the questions that were directed to the FIC. Thank you.
Thanks. FIC, DBSA.
Thank you, Chair. Chair, I will ask the Chief Executive to deal with the specific question that you asked about our program with regard to empowering or developing young people. She will deal with that in some great detail. You also ask a very specific question, Chair, about how the DBSA interfaces in this work we're saying we are doing and we have reported on. How do we interface with municipalities and also SALGA, COCTA? So that's something also that the Chief Executive will explain in detail. I just want to say that on the Dr. Beck's request that what the Chief Executive explained about the VBRF, the Russian bank, that we should this should be a written response is something we will do. We will the assurance that our Chief Executive was giving to the committee is something we will submit via our Deputy Minister in writing. So we don't have a problem with doing that. And I just want to deal with the specific issues raised by Honorable Mautwe. Honorable Mautwe, I think if there are infrastructure projects that the DBSA has been involved in or is involved in, I'll come back to Parliament separately, that are incomplete, and also that those projects themselves are bedeviled with corruption. We will be very interested, especially as the board and the executive under our chief executive who's here will help us to address that. I certainly would like to request through you, Chair, that those specific projects that Honorable Mautwe was mentioning, these are matters that we're taking keen interest in. The board does also do projects oversight visit. We don't just only sit in board committees and receive reports, but we also do project oversights. There are projects that the board sends out members to go and visit, including that the project that the board is actually busy with in Parliament. There is a team that will include the board members that will visit that project. It is our way of operation to be 100% assured that what gets reported to the board by our executive team, it's also the feedback on the ground, including the development impact, because the DBSA is about development, and that when we look at the numbers, the impact on employment, the impact on communities is something we can verify. So that's part of our way of operating, and we will be very keen to follow up on those specific projects where you say there's a problem there, including where you're mentioning allegations of wrongdoing in those projects. I want to assure you, Honorable Mautwe, that on the project of Parliament, it is very much high on the agenda of the board, because this is a groundbreaking project done by a state agency entity. We would like, as the board, to ensure that this project is delivered on budget and on time. Most of the projects we have where there's time lag, delay, which is what Training was reporting earlier on, our executive responsible for infrastructure delivery, where there are delay on projects is because there's no flow of funds. And this is a matter of great headache to the DBSA. For example, where the budget, the funding is from National Treasury, is to a municipality directly or to a province, but a municipality or a province does. So we do the work. We are commissioned, appointed to do the work as the DBSA. We do the work, but that work can't carry on. Sometimes it's delayed because we have also advanced funding. We have put a budget to that program. So we've got a few of those projects, but the relevant province or the relevant municipality is not necessarily paying, especially at the time project management and project delivery. You can't pay at the time you want to pay for a project to unfold. There's scheduling. So if the work gets done and you're not, that the money has been transferred by Treasury to the relevant institution, the relevant municipality, or even department, but that money is not made available, the DBSA can't continue or proceed to complete a project, because that affects our own cash flow. It also affects our operations. So all I want to assure you is that on a project like Parliament, National Parliament, where we think there shouldn't be an issue on the flow of funds, we are committing to the committee. I know there are many issues. I was in Parliament yesterday for another meeting. There are many issues on that project of Parliament, and we would just go back to make sure that our team goes back to the team that's doing oversight on Parliament, absolute clarity of the timelines, and also absolute clarity of what the scope of the project is. We don't want Honorable Mautwe to have any misunderstanding on what is it that was supposed to be delivered when? And I want to assure you that there will be value for money there. The DBSA is an institution you can trust on value for money. And the reason I asked our chair, the chair of our Audit and Risk Committee earlier on to speak is because we've got very strong risk mitigation and also that assurance systems and measures, especially because we know infrastructure projects are often bedeviled by corruption. So the ethical environment and the systems and processes at the DBSA, it's a matter that we have really been stepping up on. And I would say to the board that to the committee that the measures that the board are taking about this, including the delivery of the Parliament project, we have absolute measures to ensure that we deliver this project, and there's no we also have very strong consequence management measures. As you would know, I've not been at the board for long. So one of the things we have been following up is there a project in the DBSA that has gone wrong? Has there been a project that has gone wrong? And what measures have been put in place to ensure that that doesn't happen? And if there's been a project where there were corrupt practices, what consequence management was there? And I want to assure the committee that those measures are in place. I know from experience that infrastructure projects can really be bedeviled by corruption. So there will be value for money. And I would definitely like us to get the projects that have gone wrong in the proposal, that the assertion that the member has made. We want to send inspection teams on those projects, and we will be very willing to provide an update to the report next time you want us to, Chair, on that. But the DBSA is a well-governed institution. It's a well-led and well-governed institution. We want the DBSA to continue to make South Africa proud in its capacity to deliver infrastructure, raise funding, deliver infrastructure, and support government on achieving its development agenda. CE, please come in. Chief Executive, please come in on those questions that you would like to clarify.
Thank you. Thank you, Chair. Firstly, as the Honorable Chair was asking the question on the young entrepreneurs, I was actually smiling, and I'm sure so was 20, in that we are currently in the early stages of developing a program that will look at how to support young entrepreneurs in the construction industry. This is a program that we are crafting. It is at the conceptualization stage, and it will then be going through our governance process. But it is an area that we are looking at, Chair. Not only will it enable youth participation in construction, but what it will also do, it will also build the cross-sectoral skills that are required. And as we are driving an infrastructure-led economy, it's going to be key that we take these deliberate steps so that we can develop these sectoral skills to support infrastructure. So definitely something that is in the pipeline. The second thing is, in our 42 years of existence, our focus has always been local government. Our primary, one of our key focus is local government. You mentioned MISA. MISA is actually an entity that was incubated within the DBSA, and then it became a separate function over time. But it was conceptualized and actually incubated within the DBSA. When it comes to municipalities, we do quite a few. There's a lot of activities that we provide along the infrastructure value chain. For instance, in the metros, the support that we have been providing to the metros is funding. So we provide loans for infrastructure projects within the metros, and that is on balance sheet. Now, with the current constraints that the metros are facing, as the DBSA, we are looking at exploring different options to support the metros, looking at off-balance sheet financing structures. Additionally, the National Treasury is embarking on a trade services program that, as the bank, we will also be supporting. With the under-resourced municipalities, so that would be your secondary cities and your under-resourced, which is because we categorize them M1, M2, M3, M1 being the metros, M2 being the secondary cities, and M3 being the under-resourced municipalities. What we've been doing there is it's been an approach where with one municipality will provide technical support to plan infrastructure for that municipality so that they can have the required documentation to access the MIG grants. Secondly, we've also been providing revenue enhancement, where we would support a municipality with, for instance, a metering pilot or looking at their systems. Asset care as well, because we are of the view that you cannot only build infrastructure, but you need to take care of what we have. But with this work, we have been doing it, where one you would have to plan, one you support with revenue enhancement. 2 years ago, we decided to actually then respond by having an integrated municipal approach where we provide our suite of services to a district, and we have appointed partner a district. We're currently working with 5 districts, it's 8 that we have selected. Chair, I'd like to emphasize that it was very clear when we embarked on this approach. For us, it's a willing coalition, where we say if as a district you would like to improve the lives of your citizens and providing access to infrastructure and creating economic opportunities for your citizens, then we work with you. With our partner a district, we are currently working with a few, the Namakwa district, Jokabi, Hertzibande, just to name a few that we are working with as partner a district. And this is a program where we are collaborating with the municipality, with COCTA, with all the stakeholders. Because we've been in this space for all these years, we actually have a collaboration mechanism with the key stakeholders within the municipal sector. So there is already, a system a stakeholder system that we operate in when we service municipalities. So that's just to provide an overview. The last thing that I'd like to mention is that when we look at the Public Finance Management Act, it provides roles and responsibility that the executive authority plays, the accounting authority plays, the accounting officer plays, and Section 57 focuses on officials. We as an institution drive accountability, and we have governance processes within the institution that even the chairperson of audit committee touched on, that actually ensure that we hold the organization is held to account, and we execute on our mandate. And it is on these principles that even with our infrastructure delivery projects, we adhere to. With our infrastructure delivery project, we even go to the extent of where there is a strategic project, there's even a steerco comprising of various stakeholders of the of that project, and in communities there's even social facilitation that then happens. As a DBSA, it's critical for us as an institution to remain an organization that drives strong governance and accountability. Thank you.
Are you done, DBSA?
Yes, we are done. Thank you, Chair.
Okay, thanks very much.
Yes, Chair, we are done. We are done, Chair. Thank you.
Okay, thanks, Chairman. Dr. Mazondo Sarpan, are you still there?
I am here, Chair.
Any parting shots before I adjourn the meeting?
I think for me, Chair, it's to thank you and honorable members for the opportunity to enable the entities within the finance family to represent their respective annual reports. And I also want to thank them for the work that they are doing in these institutions, both the board as well as management. And I also want to wish Honorable Mautu, our mother, speedy recovery. And I'm sorry about the electricity situation. I will take it up with the Minister of Electricity, Dr. Ramhopa. And honorable members, I really appreciate the critical questions and comments and guidance from yourselves, and the concern and plea by Honorable Mazibuko on the timely submission of the report to members so that you are adequately prepared is noted, and it will be corrected. However, the National Treasury team says that they sent these presentations last week to committee secretaries, but it's an administrative issue that we will do our best that it doesn't recur, because this enable you to hold us as the executive and the government entities accountable, and accountability is critical for strengthening our democratic governance systems, including the financial governance. And where there are gaps, you've always identified those gaps and amended the law accordingly, because our laws, it is our laws and governance, management, and effectiveness of our institutions that has also enabled us to get out of the FATF grey list. Because, Chair, you'll agree with me that addressing the 22 deficiencies identified by FATF has been a collective effort. And I must really thank Parliament under your leadership, Chair, Dr. Maswanganyi, chairing the Standing Committee on Finance, for having led us and continue to lead us in ensuring that we pass the necessary legislation. I think when we're putting the list, grey list by FATF, you ensure that Parliament passes the necessary legislation to combat terror finance and money laundering. And of course, keeping ourselves out of the grey list is like winning a World Cup, but you must always make sure that you are fit to maintain those world standards. And therefore, we can't rest on our laurels, because in 2 years' time, FATF will have to give us results again on whether there are legislative gaps in our laws to combat terror finance and money laundering and financial crimes in general, and whether our institutions are effective in combating terror finance and money launderings, and as I said, crime in general, which, as members have also seen and said here, that these financial crimes also lead to murder. For instance, the issue of killing of the auditors, as raised by Honorable Kalega Mazibuko and Honorable Mautu, is very, very critical. And additionally, even where there are no murder cases, the criminal justice system should deal with crime in general and financial criminals. For instance, the case that Dr. Burke has cited, in which the PIC and other investors were defrauded through Enable Capital, has been reported to the police. The PIC has reported the matter to the police. And whilst both the private and the public institutions, including the PIC and all of us here, must improve our internal control to prevent fraud and corruption, the criminal justice system must decisively deal with these financial crimes as they are reported, because that's the only way we will make sure that our funds, which in many instances doesn't belong to government, it belongs to the ordinary South Africans. And where money is invested, it has to be protected. DBSA and other financial institutions invest money in infrastructure. And again, we must collectively deal with infrastructure mafias that obstruct infrastructure delivery, including municipalities and government departments, that through corruption, they do things that are not consistent with what we expect in terms of dealing with the citizens' money. And therefore, we should expect, working within the ecosystem as government and society, including the criminal justice system, to make sure that we're effective in dealing with crime, and crime in general, and financial crime in particular, because to maintain this status of being out of the great list is not a permanent thing. It's something that it is continuously earned. We are continuously evaluated by FATF, and if we are found wanting, there are huge implications insofar as the South Africa being a destiny for good, being competitive insofar as a destiny for investment, because investors should trust our financial institutions. They should trust that indeed when money is put in South Africa for economic growth, it will be effectively used. It's not going to be, our financial institutions and systems are not platform for criminals to use for their own narrow interests. And therefore, the effectiveness of FAIS, IRBA, to ensure that the audit profession is well governed, managed, and effective, it's a point that has been well made. In other words, my view is that today's reports have shown that we do have constitutional capacity to protect consumers, South Africans, but also combat terror finance, money laundering. And these are important for economic growth, as I said, because economic growth is a consequence of investor confidence. So I think we really appreciate and thank you, Chair, and honorable members, and thanks to all South Africans who have been listening. We are always at your service. Thank you very much.
Thanks very much, Minister Dr. Masondo. Alan, announcements.
Okay, you're forgetting to say Dr. Masono spoke like the incoming chairperson.
Okay, let's leave the side shows. Alan, are we still meeting at 6 for FFC?
Yes, Chair. I've sent the link and documentation last night and this morning. Thank you. 6 p.m. to 9 p.m. Thanks, Chair.
Yeah, so we'll be meeting again this evening to receive the annual report of FFC, as we have agreed that FFC should be treated independently from National Treasury, as is a constitutional independent entity. So that's what we're going to do from now. Let me thank everybody who has participated in this meeting today, the honorable members of this committee, all the leadership of entities reporting to National Treasury, the two DMs, Honorable Sarpen, Honorable Dr. Masondo, and everybody was here in the platform, including the media. As a committee, I think we must make a public statement that we condemn in very strongest terms intimidation, assault, and killing of auditors, be it in the private sector or in the public sector, because the standing committee is a standing committee of Parliament of the Republic. It's not only a standing committee of government. We are a standing committee of everybody. So we will condemn in very strongest terms the assault, the intimidation, and the killing, the worst part, the killing of those who are in the auditing profession or who are doing their auditing work. And I think at some stage, we'll have to engage the law enforcement agencies as to what are they doing to make sure that the auditing profession is protected. Because we don't expect the Auditor General, we don't expect auditing firms to go around with police and security. That will be added financial burden on their side. This country has got a capable law enforcement agencies. We also condemn in strongest terms these activities of the so-called construction mafias who want to do things at their own terms, violate laws of the Republic. Police must do something about these people. We hope they know who they are, because they seem to be organized. They've got arms or weapons, they've got vehicles. So they operate like an organized gang, which I think the police must crack and do something about it. We live in a country where we live in fear. It's construction mafia, extortion, even poor women who sell on the street have to pay extortion fee at the end of the day for selling bananas, for selling pap and flakes there and there. No, something must be done about this challenge of extortionists and mafias. I think the issue of youth, I'm closing, Dr. Beck, I won't allow you. If there's anything, put it in writing, we'll respond. Chairman Makura, the issue of youth involvement in DBSA, you must take it up. You know, you are a former premier, you are a former youth leader yourself. It's a serious challenge. You and me originally come from Limpopo. And if you are on the N1, you see young people who are going to Gauteng looking for opportunities, and they find that those opportunities are not there. It's heartbreaking. So big institutions like PIC, DBSA, and others in the finance portfolio, through these regulations that the minister is going to publish, there must be a strong element in those regulations that whosoever does business with the state, there should be an active involvement, whether it's in construction or it's in property. Because if we don't do this deliberately, no one is going to do it. The state is the biggest procurer of services in this country. I can't speak for other countries. So, Dr. Masondo, I think before you publish the public procurement regulations, make sure that the issue of youth, the issue of women and people with disability is quite strong in those regulations. Because if we don't do that, we'll have failed those sectors. So let's do something about it. We'll be quite happy to be invited as a standing committee by DBSA and or PIC and others to visit a youth-driven project. Young people in overalls and wearing a helmet, implementing a construction project or a property kind of development project. We'll be quite happy to be invited as a standing committee. So we'll take these issues up and make sure that we do something about them. And we appreciate, as the Auditor General has said yesterday, that there's a lot of improvement in the finance portfolio when it comes to issues of compliance more than ever before. So we are happy about that. And those that are still struggling, a lot should be done to try to bring capacity into those institutions. And I can see there are many entities here which are led by women, which is a positive development post-1994, where women during apartheid were oppressed as women, as a race and nationality, and as a class. So women were oppressed more than anyone else. But today we see women rising as chairpersons of parastatals, as CEOs, as appearing here in Sutu, Musadu, Charitipa, Kauhaleng. So we commend Treasury for affording women leadership responsibilities. Thanks very much, colleagues. Let's adjourn now, go to the sitting at 3, and then come back at 6 this evening to process the report of the FFC. Thanks very much.
Thank you, Chair.
Thank you, Chair.
Thanks, Chair.
Thank you, Chair. Good evening. Good afternoon, everyone.
Recording stopped.